Good morning, Sunday. A warm welcome to all my brothers and sisters. I so hope that most of you all have completed your morning walk or a jog or hit the gym early morning. But I'm sure most of you all have just got out of the bed. It's a Sunday morning. I know it's a lazy Sunday morning. But that morning walk or the jog is so important for a trader's mindset because it gets the adrenaline rushing through. And that kind of a mindset, a fresh mindset, is something that a trader requires. And I really hope that if you're not doing it, you make it your morning practice. Before getting on to your trades, before getting on or logging on to your to your machines, you've done your morning routine. Okay, traders, we've got an exciting session today. We've got three presenters. We've got Mr. Praveen, who's going in first. We've got Nilesh, who's going in next, and Sanadeep, who's going in third. Two exciting strategies and one exciting talk on trader psychology. So that's what we got today. Okay, first up is Praveen. Praveen, could you please share your screen?
Yes, Avinash.
Praveen, I would request you to start with talking a little bit about yourself, about your hometown, where you come from, your background, and then you can start with your strategy.
Sure, Avinash. So
over to you, Praveen, now.
Yes, can you hear me?
Yes, loud and clear.
Okay. So first of all, thank you for this wonderful opportunity. Special thanks to Jagan sir and the other volunteers who gave me this opportunity to present this excellent strategy. And I would like to introduce myself, Praveen. I'm basically from Chennai. So I'm a software professional by profession. I have like 10 years of experience in the software industry. And I'm just born and brought up everything in Chennai. So that's a small...
near Vandalur, right?
Yes.
So what is Vandalur famous for? Let everybody know.
Vandalur is...
looking at the map.
Yeah, Vandalur is famous for, we have a zoo here, which is like, I think it's one of Asia's biggest zoo. So it got some rare species also here. I think we usually visit like once every 6 months. It is very beautiful because the environment looks very cool over there. Even though if we have some hot climate also, you won't feel that one when you enter into that zone. So that is a very much interesting part on Vandalur.
Just to add on the statistics, it's the largest zoological park in India and the 5th largest in the world. And it has got something like 1,700 hectares of land in this suburb of the city. There's a very good picnic spot. There's quite a lot of modern things, except of course during Corona days, the animals, you may not know, I'm an animal rights activist. So I visit there often. And having traveled around India many times, I always wondered Vandalur as a fantastic place. Originally, just to give you a very short thing, this was promoted by the Chief Minister, MGR, who was also a movie star. Many of you may know about him. And the first 2 lions, he had his own lions in his house, 2 lions, which he donated. That was the starting point. But over the period, it has grown. Okay, now you can start the presentation. I'm muting myself.
Okay, sir. Thank you.
Before you start, Praveen, just a quick heads up to everybody that we might extend today's session by another half an hour or so. And also a quick reminder that you need to subscribe to the YouTube channel. You need to fill up the form. If you haven't done so, please do it quickly for your weekly access to the YouTube channel. And also another reminder that you need to keep your real names on Telegram. If you're not doing so, please do it immediately. Thank you so much. Praveen, you may start.
So I'm going to present a new strategy here. It is called Bill Williams Alligator Trend and Directional Strategy. First of all, we'll start off with it's a basic thing like how does the market moves. Like financial markets and individual securities trend 15 to 30% of the time, while grinding through sideways ranges the other 70 to 85% of the time. Okay, so Williams believed that the individuals and institutions tend to collect most of their profits during strongly trending periods. So in order to get those trending periods, we need some kind of a trend following indicator to get those trending moves. And in order to get that, he introduced a new indicator called Alligator indicator. Okay, and it is very simple indicator, and it can be followed, especially for the beginners. It will be very easy to understand, and they can adopt to their trading style. Okay, we'll start off with the Alligator indicator formula. The formula consists of like three.
Sorry to interrupt.
Yes,
I've enabled the live transcription in the Zoom, which means whatever you say will be typed out below. So you need to speak a little bit slowly so that the transcription can understand your accent, and
okay,
also a little bit more loud. Thank you.
Okay, sir. So basically, we can start off with the Alligator indicator formula. So it consists of three moving averages. We'll be comparing it with the live alligator. So alligator has a jaw, teeth, and the lips. So basically, we'll be starting with the jaw, which is a 13-period smooth moving average. And we got the alligator teeth. It's an 8-period smooth moving average. And we got the alligator lips. It is called 5-period smooth moving average. You will be able to understand it better in the pictorial representation. You can see here, it got the alligator lips, which is the 5 moving average, and alligator teeth, 8 SMA, and the alligator jaw, which is 13 SMA. So what does the alligator indicator does? What confirmation or what it gives to the traders? The three lines are simply placed on the price chart, which represent the jaw, teeth, and lips of the alligator. When the three lines are twisted together, it is implied that the alligator is sleeping and the mouth is closed. Okay, basically there is no trend. There is a lack of trend over there. However, when it enters into a trade, it wakes up and start eating, and again it goes back to sleep mode. This is how the process continues. Okay, this is like exactly how an alligator works. Okay, so this is the phases of alligator, like how an alligator will behaves. The first line we have already went through. If the three lines are flat and end-pointed, the mouth is closed and is said to be sleeping. The second thing, as he sleeps, he gets hungrier by the minute, waiting for a breakout from his tumbler when he will eat. Okay, and the third step, it takes a shape. That is, it starts to move, and the alligator wakes and starts eating. And once satiated, the alligator closes its mouth once again and goes to sleep. We can check in the pictorial representation. You can see, like here, the alligator mouth is closed. The lips, jaw, and the teeth were closed together. Okay, and once it opens the mouth, the trend starts. Okay? And it finishes the meal, and then the mouth closes over here. Okay, you can see like the lips coming over here, the teeth, the jaw, everything like opening up the mouth and then eating everything, and here it is closing. So this is how the alligator will work, and this is how it is compared to the market moves. And this is one of the example, like what the alligator will do before eating. Like it will go into the sleep mode. You can see here, the moving averages are twisted with each other, and it is called the sleep mode. And here, the lips crosses the teeth and the jaw, and it opens the mouth, and you can see here the moves, the trending moves. And once it is done with the meal, it again closes the mouth, and you can see once again the sleep mode starts. So this will be
once again. Let me just intervene one point.
Yes.
See, the alligator analogy is created by Billy Williams, who is one of the greatest legendary trader. He has written a book called Market Psychology. If you have time, you can read this, or Trader Psychology. Now, the thing is, we have to relate it to the big picture. For example, Nilesh presented on the squeeze, right? We also know what is the sideways. Now, there are basically, we can categorize ourselves into 3 set of traders. One, reversal trader. We know it, Billy, we use, and other indicators, reversal trade, where we use the other concept like RSI divergence concept and related. The first is the reversal trader. Second is the breakout trader. So people wait for breakouts, like in the case, let me come to the specific alligator example later. So let me first explain what are the three categories. So second is the breakout trader. Third is the range trader. That is the levels trading, where you know what is the range, day high, day low, and different support and resistance, and then you trade between them. So when we talk about this indicator, we should know what is relevant in what market setting. For example, if the market is range bound, right? So then really will not be of much use. Or when there is no reversal patterns, you know, it may end, or the market is trending more perfectly. Then certain other things will come into the picture. One of them is an alligator. So here you are waiting for a breakout or a trend here particularly. And then those indicators which can be classified as a reversal or a range bound will not work here. So fundamentally, this is a very important starting point for the beginning traders who are struggling, who are making loss, because Bank Nifty is a very volatile instrument. So not everybody can handle. So even if you want to be in Bank Nifty, this is a starting point, a very simple strategy, but a very effective strategy. Then point two, which Praveen Raj could have elaborated. See, the more the alligator sleeps, then it becomes more hungry. So what happens when it becomes more hungry, then it is eating more aggressively. So this is the analogy. So when you compare with the actual day trend, the more sideways trend, the more time the sideways trend is there, that means the alligator is sleeping for a long time. That means it's going hungry. So the breakout, either upside or downside, is going to be very big. So this can be really compared to the squeeze concept, what Nilesh has explained in the other thing. When the squeeze is very longer, then the breakout can be very strong, up or down. Okay. So this should be put in the category of the trend or breakout strategies, not for reversal strategies. Okay. Go ahead, Praveen.
Okay, sir. Thank you, sir. So basically, as Jagan sir said, it is used to spot the trending moves. So in a perfect uptrend, you will find the green greater than the red and red line greater than the blue line, as we see in the picture. So similarly, in a downtrend, it will be like vice versa. And you should always enter the trade when it is entering into a particular trend, and avoid when these lines are twisted together. So in a range bound market, we should avoid using this indicator. And for additional confirmation on the trend, we can add 200 moving average to conclude bullish or bearish trend. It's a simple indicator. When it is above 200 SMA, indicates a bullish trend, and below 200 SMA indicates bearish trend. It has to be compared with the alligator indicator as well. Okay. I can show you some live examples, like how it behaves. So you can see here the alligator is sleeping for a while.
Praveen,
yes, sir.
Just to clarify for others
yes,
who
sir.
entered a bit late. Okay, correct me if I'm wrong. The lip is on the top and the teeth is in between. The jaw is below. Am I correct?
No, so the lip will be the
top portion.
Yeah.
And then the teeth, then the jaw. It comes lowest, correct?
Yes, sir.
Okay. That.
Hello. Hello, sir. Lost you. Hello, can you hear me?
Praveen.
Yes,
yeah.
yes. Yeah. Okay, you can see here, like the alligator was sleeping for a while, and you can see the trending move starts from here, and you can see how the market behaves. So it all goes from here to here, and it closes to mouth over here. Okay, so this is just an example of the real-time example of alligator indicator alone. Other indicators will be concentrating it now. So additional indicators, the alligator indicator can also help traders designate impulsive and corrective wave formations. But again, every tool works best when combined with other indicators. So we have some list of indicators that is to catch up the trend. We have certain list of indicators to add to the alligator indicator to make it more effective. Okay, we got like a Gator oscillator, which is a strength indicator. Gator oscillator is also similar to alligator indicator, but instead of moving averages, it uses histogram. So that will be the difference, and it got some phases also. We'll be like concentrating it in the next slides. And we got like awesome oscillator. It's a momentum indicator, and we got ADX and divergence indicator KDJ, GMMA, and RSA and EMA. So these are indicators which can improvise or it can be more effective when combined with alligator indicator. Okay, so coming to Gator oscillator is very similar to alligator indicator. It helps to detect the trend changes in an asset price. So as I said before, it is just the difference between the alligator and this is it uses histogram, and it also has some phases like sleeping, awaking, eating, settle. You can see here. So this is the picture. You can see, I'll explain one by one. Like in the sleeping phase is when both of the bars on each side of the zero line in the oscillator are red. So you can see here. So the upside bar and the downside bar, both are red. So it indicates this is the sleeping period. And second one is awakening phase. Different colors on each side of the oscillator. So you can see here. So it shows like different colors, green, red, and green like that. And the third phase is eating phase, when there are green bars on both sides of the oscillator. So this means that the alligator is trending, meaning that the alligator is start to eat. And last phase is sated phase. Sated phase is like it is the alligator is closing its mouth and it slows down a bit as the alligator is starting to get full, and therefore it is sated. So you can see here the different phases. It is sleeping, wakes up, and then a buy signal, and when it starts to eat, and again it goes to the sell signal, and again it sleeps. So this is how the Gator oscillator will work. So we can compare it with the real-time scenario. So you can see here, I marked it with a circle. You can see here it is like in the awakening phase, and then it goes into green, which is eating phase, and then again it crosses here and there. So you can see here, and it starts to reduce its range from here, and it goes to sleep mode. Okay, and this is the second example of how a Gator oscillator will work. You can see here that the trend starts from here. So awaken, eaten, and it is full, then got settled. Okay, and the third indicator we are just combining with this Gator oscillator is awesome oscillator. As its name relies, it's a very good oscillator, providing insight to the weakness or strength of the market. It is used to measure market momentum and to affirm trends or to anticipate possible reversals as well. Okay, it's a boundless indicator anchored around a zero line and displayed as a histogram of two simple moving averages, one covering the recent momentum and the other a longer period in the market. So it is like 34 period simple moving average and a 5 period simple moving average. Okay. So this is how the histogram will look like. So you can see here. So basically the awesome oscillator has three different types of patterns it got. The one is called zero line crossover. The second one is twin peaks. The third one is saucer. Okay. Zero line crossover is the simplest of the all. You will be able to find it very easily in the pattern things. When the AO awesome oscillator crosses above the zero line, the short-term momentum is indicated to be increased faster than the long-term momentum. As I said before, it is 34 versus 5 moving average, and the trader may be prompted to enter a long position. Okay, and again the reverse case, when it is crossing the zero line from positive to negative, it indicates short position. So you can see here. So this is the awesome oscillator. You can see here it is crossing from the negative to the positive. So it indicates a bullish crossover and it's in buying opportunity. We can check in the live examples as well. So it is not.
Can you go back to the awesome oscillator?
Yes,
I think you are suggesting that we should enter only when it crosses 0 point. Is that what you are suggesting?
Yes, sir.
No, that's not correct. That's
no,
not
sir.
correct.
It has.
Go back. Okay. Go back to the oscillator, please. You see what happens. You watch those red lines down, right? Okay. Yes. You have to. Can you mark a vertical line quickly? Is it possible? Oh, this is a PowerPoint. Okay. So let me explain. That's why I would prefer to handle these things in the TV chart. But never mind.
I can show it in the TV chat, sir.
No. You go to that example. Please don't move unless I say so, because I'm talking based on that particular PowerPoint. So you see the red one left to the left of the circle. So that is reaching the peak. Yeah, correct. Don't you have this one? Sorry. Okay. I was talking about the crosshair. Yeah, I forgot this is a PowerPoint. So the red one, which is really the longest, you already know by experience when it is reaching, it is almost at the low end or the highest, and it is likely to reverse. It's very easy to find. That's why we like this awesome oscillator. Then the moment it starts decreasing, you can anticipate that the trend is changing, right? It's a very good pictorial histogram. So you can take it here in the green itself. So you can imagine, again, if you show it in the TV, I can even show you how much points is the difference. Unfortunately, this is in a PowerPoint. So you can take it when the green start coming down. That's why it's marked as green. Why it is marked as green under the zero line is because the uptrend has started. That's why it is marked as green. Otherwise, I would have marked as red. That's why it has been changed to green, to show that the uptrend has started. Then it is crossing. You have already, by this time, you could have got about 120 points. In my experience, I'm telling you, it could be different from market to market, from the day to day, depends on the momentum and everything. Then the uptrend start from zero line to up. So where is the exit point? At the end of the green. So once you get this red line, what you call vertical line, so the uptrend is exhausted. Now either it is a sideways movement, or then you look at the divergences. You look at the what you call the there is a particular word where the price and the volume are in opposite direction. Basically the divergences. So that even though the price is increasing steadily, your open interest, your volumes, which you will be learning later, all these are decreasing. So there is a divergence. So you basically get out. That is the point, which will show it later. I'm sure Praveen Raj will show perfect examples in the trading chart. So that's how you get out here. So you again wait. So this is the point. So Praveen Raj, to correct you, the exact point could be somewhere below itself, below the zero line. It can be traded when the market starts reversing either on the long side or the short side. Okay. So your buying opportunity, actually, you should shift to the left. Where, that should have been shifted, and the arrow actually should end a little bit before. So what you have done is you have shifted this to the right. The whole thing should be shifted to the left, and you should be exiting much before. You see, there is a doji there. So we'll talk about the details. It's not the time for that. Just I wanted to show you to correct so that there is no misunderstanding. Thank you.
Okay, thank you, sir. Okay, so adding to that, we have like a zero line crossover. So as Jagannath has said, it is like we should enter much before. And this is also one of the example. And again, here also it applies the same. When it starts green in the negative region itself, we can look for a buying opportunity. Okay, so these are small examples. And we have like the second strategy, second method in the Awesome Oscillator, which is called Twin Peaks, which is used to identify market reversals by examining the difference between two peaks on the same side of the zero line. Okay, the meaning of like two peaks is like, so you can see it here in the example, it has a peak over here, and again it got a peak over here, but you can see the Awesome Oscillator was not in the peak. So it got reduced from the peak and it is near to zero. So it indicates like the bullish twin peaks are on the track. So bullish twin peaks occur when there are two peaks in momentum below the zero line. That is the second being closer to the zero line than the first. Okay, for this pattern to occur, the Awesome Oscillator must stay below the zero line during the formation of both peaks, and the next histogram bar after the second peak must also go green, showing continued bullish momentum. So this is the other example, like for the twin peak bullish momentum. You can see here the low is here, the next low is here, and you can see a divergence happening over here. So it is not the same. So it is close to zero as well, and it indicates the reversals in the ongoing trend. Okay, and the second part is like the bearish twin peaks, and it's a reverse conditions. Like both peaks must occur in momentum above the zero line, with the second peak lower or closer to the zero line than the first. You should also look for the next histogram bar after the second peak to be red, ensuring the second peak has formed and it is not continuing to grow. You can see here, this is a twin peak bearish. You can see the market is going higher and higher, but here it is not happening the same way. So it indicates like the market likely to reverse, and it got reversed as well. And we can see some more examples in the real time as well. You can see here, so the momentum is not the same. It is getting lower and lower here, but here it is not the same. It is getting higher and higher. So it indicates a possible reversal. That is, the ongoing trend has come to an end like that. It indicates, and it happens the same. So it is, the trend is not continuing for some moment over here. So this is the example of bearish twin peaks. Sorry, bullish twin peaks. So this is like another example. So you can see the first peak here, the second peak below the first peak, and you can see the market reverses from there. And you can see the green bar started to appear, and it continues. Okay, so that's it about the twin peaks. And the third method in the Awesome strategy is like saucer. The saucer focuses on identifying movements in 3 consecutive periods on the same side of the zero line. Okay, a bullish saucer is identified when the Awesome Oscillator is above the zero line, and 3 histograms go in order, like as one red bar, the second red bar which is lower than the first red bar, and a green bar appearing immediately after that. So it indicates a small saucer shaped dip. Okay, and we can get more confirmation when the fourth bar, provided it is also green. Okay, so this is an example. So you can see here it is consecutive red bars, and it is lower than the previous bars, and you can see like the green bar appearing, and it starts to reverse. So again, for the same thing here, it's an example for a bearish saucer. You can see continuous green bars and a red bar which is bigger than the previous bar, and you can see the trend continues in the bearish side. So this is the definition of bearish saucer. So this is also a very good example. Like you can see like 2 consecutive red bars, the second bar is lower, and the third bar is green, so bigger than the second bar. So again, you can see the trend starts move to upwards. Okay. So apart from this, you can use other indicators as well. Like we have already gone through this ADX DI indicator and GMMA index, which is a directional strength indicator having a moving average in place, and RSI EMA, which is a divergence indicator, and KDJ, it is also a divergence indicator. I'll show you some live examples like how a confluence works for all these indicators. So you can see here, like this is the entry point we got. So yes, sir.
With the standard we are using, blue always represent in all the presentations. You will see blue always represent an entry point, and the black vertical line is the exit point. Am I correct?
Yes, sir. Yes, sir.
Is it how you have used, right?
Yes,
so
sir.
All
yes,
the
sir.
presenters are using this format of blue line for entry and black for exit. Correct?
Yes, sir.
Okay, thank you.
You can see here, like this is the entry point. You can see the alligator is opening its mouth. And coming into the stop loss, we should have the fractal stop loss. I have added the indicator, and I need to work on this indicator a bit more. You can see here, it denotes the last lower high or higher low. So you can see here, like we can get an entry over here, and you should keep the stop loss on the last fractal fractals. And then you can drive the moment. Like you can see, like the gator indicator also indicating a momentum, and also you can see the awesome oscillator is having a bearish histogram over here. So it indicates, and also you can see the ADX also showing some momentum on the bear side. So you can see the trend starts move over here, and it almost like ends over here. And I'll show you some more examples.
Praveen,
yes, sir.
I want you to off this fractal. It is not complete. So
yes, sir. Yes, sir.
I will give you an alternative. You do one thing.
Okay,
you give an alternative stop loss, which is the lowest of the previous, opposite bar.
Yes, sir. Yes, sir. Yes, sir.
Can you do that? Because fractals you haven't completed. So let's not put it and confuse people.
Okay, sir. So I have done
stop loss alternative method.
Yes, sir. So I have done that, like use the previous lower highs here. So here also you can see the confluence, like it starts on the bear side, and it starts to print on the bearish side, and you can see like the trend starts over here, and it keeps on moving here, and it ends here. So you can see like the alligator closes its mouth here, and you can see the ADX also showing a divergence here. And here also the awesome oscillator starts to print green bars in the below zero line. Here also you can see here, you can enter here, you can place a stop loss on the last lower high, and you can drive the momentum. So you can get an exit over here. You can see like the confluence, it is crossing over the zero line, and you can see the trend ends here. You can book the profits in this spot.
One moment.
Yes, yes, sir.
Just can you measure on 12th? We are talking of the 12th of May, right?
Yes, sir.
First entry and exit. You go to the morning on your left on 12th.
Okay.
Yeah. Can you measure the points? How much it is? Yeah, this one, the 935. You are
yes,
there.
Sir.
Can you measure that point of how much profit or gains you will make? Your entry and exit. You mark the entry and exit. I just want to have an idea how much punch it is. You know how to measure?
Yes, sir. I'm just trying.
No. You have the entry and exit. All right. Wait.
Okay, sir. Okay.
Yeah.
I'll do it.
I want you to measure the point. You are fine with your entry and exit. No problem.
Yes, sir. So it is 34,723 is the entry, And we got an exit like 33,958. Here 520, and then here we got like 969, almost like 600 points.
No, that's okay, Praveen. There is
Yeah.
another way to measure it. You go to the left, yeah, then you click there, then
Yes,
measure
sir.
and show, please. No, the full. You are
Yeah, yeah, yeah.
You need some more. Yeah. Start. Yeah. Drag.
Okay, got it.
So they. Yeah. Good. Okay.
So,
Partial. Yeah. How many points is that?
835 points. 835.
835.
Yes.
See. Okay. Now, what is the point I'm trying to make? Sanadip's presentation is going to tell you about some best practices and things like that. So 800 points. This is, we are talking about the ratio, risk ratio. Here I will not, the stop loss. I mean, the risk loss is more than 1:10, if I remember, right? I think the stop loss is below 80 points or even 50 points, you have put the stop loss. If you catch a move like this, when the risk reward ratio is, let's say, 1:10 here in this case, even 1:5 is good, or 1:3. So in this group, what we are always talking is running the profits higher and cutting the loss lower. This is one of the main points, which Sandeep is going to explain later in his presentation. But I just, now that I got a good example, I want to use it. So what we need to use, see this risk reward ratio, it is 1:10. You take one trade like this in a day, that's enough. Finish. So it's not number of trades, it is the quality of the trade, what you do. So when you go in a risk reward ratio above 1.1:3, 1:5, this is always what I'm advocating. I'm not advocating a 1:1 risk reward ratio. I do not advocate 1:2. I advocate 1:3 or 1:5. That is how these indicators are set up. So that's why our indicators are succeeding. People are able to take the trade. And now we are adding one more this strategy so that it can be very simple for the new traders. So people can start trying from next week. Okay.
And also you can see like additional confirmation, the alligator is sleeping for a long time over here. Since last day, the alligator was sleeping for a very long time, and that shows the momentum over here. And this also you can see one of the buying strategy, like you can enter over here. So all the conditions are satisfied, and you can travel this range. So it gets end over here. Then the last example, I guess. Yes. So you can see here, like you can enter over here. The stop loss will be like the previous high, and the trend gets over here. So this is also a good point. I think like a 679 to 413, almost like 200 plus points. You'll be able to catch it over here. So apart from these indicators, we have used like a GMMA index and RSI EMA as well along with this one. So that will also work in confluence with other indicators. You can see this is the entry of one trade in Nifty we got. Like you can see, like you can take the entry over here and the trend gets over here. So this is also a great moment. We got like almost like 150 plus points we'll be getting in this trade.
More than that, I think. So your present is in Nifty also, right? Am I
yes,
correct?
Sir. Yes, sir.
So
this is Nifty.
Your presentation includes Bank Nifty and Nifty.
Yes, sir.
Yeah, for both this can be applied. Just to clarify on behalf of the audience that this strategy can be applied for both Bank Nifty and Nifty, and you have used different indicators just to demonstrate all the 6 indicators work with both Bank Nifty and Nifty. Am I correct?
Yes, sir. Yes, sir. Exactly.
Okay. Thank you.
So this is how this indicator will work with other confluence. That's it, Avinash, from my side. Any questions for me?
Yeah, there are a few questions out here. Mahesh is asking whether GMMA is also a moving averages. How different is it then when compared to GMMA in terms of Alligator?
Avinash,
Yeah.
you please ask the questions only which related to his presentation. That is Praveen Raj's presentation. He will answer. This comparison between different strategies, that's another topic, which I will do it myself when I'm
No
going
problem.
to.
No problem. Next one from Varun Bajaj. He says, in terms of the entry, his questions regarding entry out here. We will enter at the end of the 1 minute candle.
Yes.
That's right.
Yes. Yes.
Yeah. So Varun, are you clear with your? Varun, you can unmute yourself to ask the question, please. Varun. Okay. How many other indicators required for confirmation, 2 or 3? Rakesh, this is a game of probability. So yeah, obviously, the more number of indicators that confluence, the higher the probability. Yeah. Warren got the answer. That's it. No more further questions here.
Okay, Avinash. Thank you for the opportunity.
Thanks a ton, Praveen. Thanks a ton, Praveen.
Avinash.
Yeah.
Avinash, this is Raghavan here. One question from me to Praveen.
Yeah, Raghavan.
Yeah. So Praveen, like you tell for Alligator that is a 5, 8, and 13 moving average, right? Did you try any other setting other than that, like 10, 21 or 10, 13 and 21? Any other combination that you tried?
Let me answer the question. Yes, it is possible to change the combination depending on the instrument. Two things. There are 4 or 5 factors. Okay. Actually, it's a good question. All these indicators, nothing is written on concrete, number one. Second, everything changes depending on the market structure. Third, it depends on the instrument that you are trading. Fourth, it depends on the volatility of that particular period. So, for example, Billy, when the Ukraine war started, I changed the settings to 75-25, and then from 92, I changed it to minus 95 and minus 5. If I remember correctly, correct me if I'm wrong. So similarly, these things could be changed, slightly tweaked. We call it tweaking, not to a major change, without changing the basic structure or the concept of these crossovers, right, happening. It's basically a moving average crossover strategy, like the one of GMMA. It can be compared, where that is 2 sets of 5-5 moving average, short and long. So whereas here, it is a different concept. It's based on Willam fractals. So about Willam fractals, in Nilesh is going to talk a bit about it. So I don't want to talk about it. So the answer is yes, it can be tweaked, and that is my job. So when I give that and when I tell you, please, the basic chart, do not change the input. All the other things you can do, changing the indicators, combining, permutation, combination, define your own chart according to your strategy, yes. But this input changeover is a very specialized job, and only few people can do that. For that, it needs a lot of understanding about the market structure. Okay, so you can try if you are really keen on it. You can experiment, but I don't try too much with a high volume in the market. You can try to change. Always you can play around, but don't do that in the basic chart. You open another chart, you can try, experiment, and see how it happens. As long as there's a confluence, we are fine. Look, any system that works is a good system. I'm okay with that.
Okay, sir. Thank you.
Thanks, Praveen. Up next, we've got Nilesh. Nilesh, that's your screen. Nilesh, could you please share your
Yes,
screen?
yes. Just
Yeah,
1 minute.
yeah. Till the time Nilesh shares his screen, just a quick reminder, you've got to subscribe to our YouTube channel and fill up the form to get access to our YouTube videos on a weekly basis. And another heads up is that we might be, the session is extended by 30 minutes. So yeah. And now over on to Nilesh. Nilesh is from Mumbai. He hails from Kalyan. Kalyan is a hogger's paradise, if I'm not mistaken, Nilesh. Right? Yeah,
Come
is it?
again.
I said it's a hogger's paradise, isn't it?
Yeah.
Lot of eating joints out there.
Yes, a lot of eating joints, a lot of
Yeah,
foods.
yeah, yeah. So yeah, Nilesh, you could just introduce yourself, tell a little bit about your city and your place,
Yes.
and then you can move on to your strategy, please.
Hi everyone, my name is Nilesh Kumawat. I'm an electronics engineer. I stay in Kalyan, like Avinash said. It's roughly about 25 kilometers away from Mumbai. Talking about my state is the financial capital of this country. Has a lot of foods. The climate here stays similar like throughout the year. Even if you come in winter, you'll feel like it's summer. Yeah. Okay.
Yeah.
Now let's talk about this new strategy. This is not the new strategy, but this is an indicator which we'll use. This is Jagan sir likes to call it as the mother of all indicator. Before we start, we'll go into. Before we start, I just want to know how many of you guys have watched KGF movie 2, KGF 2. Like I'll be using that as a reference. Okay, so let's start about ranking method here. Ranking is simplest performance evaluation method in statistics. Ranking is the data transformation in which numerical or ordinal values are replaced by their rank when the data is sorted. So
1 moment. Sorry, it is already in our chart, right? 2.2 or 2.1. Can you clarify?
yeah, it is in 2.2, sir.
Okay, good. Continue.
Yeah. So can you see this is the Nifty 50 weightage? As you can see, Reliance holds like 12.86%. See, these are the top 10 companies: Reliance, HDFC, Infosys, ICICI Bank, HDFC Limited, TCS, Kotak. See, these are the top 10 companies, and these hold roughly about 57.7% weightage, and the other like the rest 40 companies hold roughly about 42.23% weightage. Now I'll come back to this. Just remember this. I'll come back to this. I'll explain it to you when I open the chart. I'm just showing it to you now. This is for Bank Nifty, major banks and their ratio, their weightage in the Nifty Bank Nifty. Now let's talk about ranking system, probability convergence. The most recent daily rank become a collective and accurate reflection of all traders' current sentiments. By someone is, I think someone, yeah. By framing the indicators into a model, there is a better judgment of taking trades in a strong trend. This means, like, whenever we take a trade in Confluence, it helps us get a strong trend and gain maximum output. As you can see, whenever we do option buying, two things are very important: trend and momentum. Even volatility and volume is important. So even volatility is important, and as this is a game of probability, whenever we use DVM strategies, trading strategies, trend, momentum, volume, volatility, the result is in higher gives us higher probability of return with a defined risk. The challenge is to try and to quantify the probabilities. Like to quantify the probabilities, we use confluence of multiple indicators. We use leading and lagging indicators. And now, in the previous Bollinger Band, I was very obsessed with using the leading indicators. I was not very convinced on lagging indicators. But what I have while studying this rank delta, I come across. I got to know that every indicator has a story. The leading indicator, lagging indicator, that is based on the time frames we watch it. So here is an example of what trend the indicators are. Alligator is a trend indicator, like Praveen told us before. I'll talk about fractals AMA, Frama indicator, super trend is already done, MACD, ADX, RSI are already done. OBV and MFI are volume indicators. They'll tell us about the volume, how if it is overbought or oversold region. Then there's a ATR volatility indicator, Bollinger Band. I explained VIX, Keltner regression. This is Keltner regression is very similar to Bollinger Bands. And we use data like open interest, OI premium, PCR. Now let's come to strategies. See, these are the strategies we have completed. Super trend was done by Aman Bindra. Renko swing was done by Ajish. EMA scalping was done by Sanadeep Kumar sir. Only candles and with morning strategy was done by Arvind Elongan. Bollinger, I did it last week. Double VWAP band was done by Gauri Shankar. Bill Williams, Praveen Raj just finished it. And next I will be doing rank delta indicator super trading strategy. So before we go to this rank delta, let's do a quick recap. If sir, can we do it of all the strategies? Okay.
Meaning just you can, if you have the chart, show.
Yes, I have the charts.
Yeah, just a recap.
So yeah, just a recap. So what we will do is we'll find a confluence of all the indicators. This is for scalping only. This strategy was done by Sanadeep sir. He used two charts. He also used the third chart, Renko, 5 minutes time frame. But as you can see, this is the chart. This is for scalping only. We will find a confluence of multiple indicators to take a trade. Now, for example, this here is a trade.
Sorry, Nilay, just recap. You don't need to explain.
Yes,
they can go back to the YouTube and they can see it.
Yeah, you can check on YouTube. Sanadeep sir has explained very beautifully. The second strategy is super trend strategy. We have used like 3 super trends. Price above the 3 super trends is a buy signal. Below it is a sell signal. Again, if you want to go deep, we can go. You can go to YouTube and watch it. This is the Renko strategy. Ajish did it. He used Ichimoku cloud. He used the concept of leading lagging spans and Ichimoku cloud, the Komu and things. This strategy is for swing only. If you're a swing trader, this strategy will help you. I will not explain the candle and Bollinger because Arvind has done a wonderful job explaining the candlestick patterns and things. He's an expert on it. Bollinger band, you can watch the last YouTube video on YouTube. Double band VWAP, you can also watch it on YouTube. Now, let's go back to this. Yeah. Now let's talk about rank delta, how the indicator looks. Okay, I will explain everything shortly. So the first column you'll see names. It will have major bank names, indexes, and major stocks of Nifty 50. This is the last traded price. You can see the first column. This is the percentage change. Again, the first column will show you VWAP. See, you can see buy, sell signals. So if the price is above the VWAP, it will give a sell buy signal. If it is below the VWAP, it will give a sell signal. Alligator, this sleep in rank delta means it's a neutral signal. Alligator uses 8 period, 13 period, and 5 period moving average. Praveen has explained it beautifully in the last presentation. So I'm not going too deep into it. This also has super trend. We are using 3 super trends. One is 10-3. The other one is 14-2. And the third one is 21-1. The length. If the price is a
small change.
Yes, sir.
In our super trend strategy, we are using 7-3. We don't use 10-3, but that's fine. No problem.
Sir, I've used 7-3 in my chart.
Correct. Yes, that's
yes,
just
sir.
I wanted people to be aware of that.
Yes. So we have 3 super trends here, and if the price is above first, it will give you a buy signal. This 10-3, it will give you a buy signal. If it is above second super trend, it will give you a buy signal. If it is about third super trend, the 21-1, it will give you buy signal. Now coming back to ADX, you'll say what is this plus plus plus? You will find this in ADX and RSI. RS, we have values of ADX. For example, ADX is between 0 and 25, it is a weak signal. If it is between 25 and 40, it is a strong signal. And above like 40 to 50 plus, it is a very strong signal. So that's how the plus plus is defined. Strong, it will give you a plus sign. Very strong, it will give you a double plus. And further, it will add more. RSI is also similar. I have a chart of RSI. I couldn't finish it last time in my Bollinger Band setup. See, this is the range. This is the actual range of if it is between 40 and 60, it is a sideways market. If it is a downtrend, it is between 40 and 20, ideally 60 and 20. Strong downtrend is between 40 and 20 and below. Uptrend is between 40 and 80. Strong uptrend is between 60 and 80. Next one is MACD. 26 period minus 12 period moving average. We have Frama indicator. I will come to this Frama indicator soon. And we have volume. It will tell you about volume. And this is RS is for comparative relative strength of the stock. For example, if you're this rank delta allows you to trade stocks also, not just the indexes. So for example, if you're trading HDFC Bank, here it is. RS will help you to compare it with the index. Indexes. Bank Nifty is the index for HDFC Bank. For even for ICICI Bank, RS will compare it with Bank Nifty. So RS tells you about the relative strength of the stock compared to the indices. This also can be used in reverse. For example, if the private, as I said, remember the weightage thing I told you, I'll come back to this. These major banks have a lot of weightage, private banks, for example, HDFC, ICICI, and Axis Banks and Kotak Bank. So whenever these private banks are flat, you shouldn't go bullish on Bank Nifty. Now, this is the ranking system. You can see here. Now, for example, this is a neutral signal. Here, CNXIT has given 10. Can you see this 10? I'll count 1, 2, 3, 4, 5, 6, 7, 8, 9, and there's one more signal. It will add to 10 total. This is ICICI Bank again, 4, 5, 6, 7, 8, 9, and one more. It is hidden. It will add to more. I'll come back to the live chart soon.
So once again, so if when you chase, sorry, Nilesh, to
yes, sir. Yes, sir.
Just want to be very clear because this needs complete understanding. So when you say 10, 11 signals are giving a sell, your conviction increases. Am I correct?
Yes, sir. This is very similar to you having a confluence of multiple indicators. For example, here we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 indicators we have. And this ICICI Bank, this has given completely sell signal everywhere. So there's a confluence of all 11 indicators. It tells us that, you can sell the stock. It is in a downtrend.
Let's go to Dow futures now. Go to the top.
Yes, sir. Dow futures.
So let me assume that I'm trading in Dow futures. Okay.
Yes, sir.
It is giving all the super trends are on positive, right?
So, but here it is a neutral.
No, one second.
Yes, sir.
Go to Dow future. All the super trends are positive, correct?
Yes, sir.
Now MACD and Frama is also positive, correct?
Yes, sir.
So we have 5, and particularly 3 super trends which are giving positive. As far as people who are trading Dow future, it's a bullish signal, correct?
Yes, sir.
So if you see the change, unfortunately, the change percentage is not there. Dow is up by 335 points, right?
Yes, sir.
So in your mind, while you are trading, we are, people with OI pulse know that we always look at, we'll come to that another time, Dow futures, oil, gold, and all those stuff, the global Q. So now while you're trading, you have to keep it in mind, our market is getting completely not in line with the global Q. We are on the other side. why the global Q is strong at that point in time. Dow futures is 335. Still our market is weak. Okay. So to get that perspective, you can use not only with our system, we are going to develop a proper model for this. You can add even oil, you can add the INR, USD. These are all the rows it's possible. You are going to give an example for the stocks, right, Nilesh?
Yes, sir. Yes, sir.
So why I'm saying that is, while we are looking at, you can even get a big picture of what is happening in the US markets, okay? And also what's happening. Even if you're trading in Bank Nifty, you can see what is happening in Nifty. Then some of you, in first class also, you should say, they say sometimes Nifty is doing better. Some days Bank Nifty is possible to trade. So you can take the decision where to trade, whether you are going to trade in Nifty or Bank Nifty. Okay, good.
Yes. One more thing. You can see this indicate time frame. From the chart I have taken this, I have used 3-minute time frame. You can use like multiple time frames, for example, 5 minute, 1 minute, 15 minute, 1 hour. And here, this will combine and tell you what the signal is. If the market is neutral, if it will go downtrend, or see here the market was neutral when I took this. It was a tad bit flat. Now this is just a photo. I'll show you in the live market what happens. I'll come back to that. So here the total indicators, like I mentioned, MACD, RSI, ADX, relative strength, VWAP, volume, super trend 21.1, super trend 14.2, super trend 10.3, alligator, Frama. This is my first chart. I'm using rank delta. So this is 11 indicators. I'm using Bollinger Band for Bank Nifty, GMI, GI, KDJ, and I'm using this Willam fractals. This is a very beautiful indicator. Like I said before, if you have watched KGF movie, when the hero comes with a different sort of gun, he goes to Dubai and brings new gun. This Willam fractals will act like that new gun. And these are total roughly about 11, 12, 13, 14, 15. And here we are using 16, 17, 18, 19. We are using a confluence of multiple indicators, like more than 20 plus. In the first chart, Bank Nifty, I'm using Heikin-Ashi 3-minute time frame. Now the time frame I'll be switching it up, because during the first phase of trading between 9:15 to 9:45, we'll be using 1-minute time frame. After that, we'll be using 3-minute time frame from like 10 to 9:45 to 10:30, 11. After that, we can switch to 5-minute. We can shift to 15 minutes, and during the later phase, we can again come back to 1 minute or 3-minute. This is my second chart. For Nifty, I'm using Renko 3-minute. Again, the time frame is not fixed. I'm just using it for the reference. I'm using rank delta here as a body, RSI, EMI, stochastic, awesome oscillator, and Willam fractals. I like this new indicator. I just came across it like 2 days back, and it can work wonders in trading. I'll come back to the chart. Okay, so what are the conditions to buy? Whenever the price is above VWAP, trading above VWAP, whenever the alligator, the price is trading above the lip, jaw, and teeth of the VWAP, price is above the super trend 1, super trend 2, super trend 3. You can this gives a buy signal. Again, like I mentioned, relative strength, the comparison of stock with respective indexes. If the percent change of the bank stocks are over the given time frame is more than Bank Nifty, then it's a buy signal. Again, for the IT stock, TCS, Infosys, if the percent change over the given time frame is more than Nifty IT index, then it's a buy signal. Similarly, if we use Reliance and the stock Nifty 50, like I mentioned, I'll come back to this slide. See the weightage and thing, Reliance, HDFC, Infosys. You can compare it with Nifty and take a buy signal if the percent change of stock is above the Nifty. This is a sell signal, conditions to sell. If the price is trading below VWAP, again, like Praveen mentioned, the jaw, teeth, and lip of alligator, if the price is below it, again, with the super trend, the 3, relative strength, it's a sell signal. Now, this is what my first chart looks for Bank Nifty. I know it looks a bit complicated, but it's not. I'll explain it to you. And this is what my Nifty. This is for swing traders. Like as I mentioned, Renko is for swing traders, people who like swing trading. Now, I'll come back to the charts, but let me tell you why this multi-time frame is important. Let's finish this Bank Nifty and Nifty first. Okay, I'll come to the charts. Okay. So this is what my chart looks like. What I've done is whenever you add a rank delta, it comes up here, the top frame. I've just changed the setting. I've gone to rank delta and I've changed the panel position. It was top right. I changed it to middle right, and that's it. See, the circles about volume also are given. White circle is if the volume is between single white circle. If then there's a blue circle, there's a orange diamond. If the volume is above 150K. Now coming back to the chart, I have used GMMA index. I've used rank delta. I've used Bollinger Band, 3 bands, and I've used fractals. There's this KDJ indicator and Willy. The time frame is 3 minutes. Like I said, we shouldn't be stuck on a single time frame when you're doing option trading. Now I'll change the time frame to 1 minute. You can see it is given it swings between this and 3 minutes. Now if I change my time frame, I use 1 minute. See, rank delta charts takes about 40 to 50 seconds to appear on the screen because it calculates. It does a lot of calculations. So let it just appear on the screen. It's loading. Yeah, here it is. See, can you see the time frame has changed? It is swinging between 1 minute now. Now, when you take a trade, I'll go to morning trade. I've added a 1 minute time frame, and this the marks might have changed a tad bit. Yes. So here, one more concept about fractals. I'll explain it very shortly. And there's one more thing called as Frama, and then I'll show you the confluence of multiple indicators. The reason to have multiple time frame that I will explain that too. Let's just finish this fractals. Okay, I'll come with this. See, this is we are using Williams fractals for this strategy. Now, market prices are fractals in nature. What are fractals? Fractals is, the language of universe is written by God, or if you don't believe in God, whoever has written the language of universe, it's mathematics. And this, whenever you, this fractals is a very important part when you study it. Fractals are paradox. They are very simple but very complex. These are older than dirt, and still never to us because it has been here for like 40 years now. The concept of fractals is here, but the fractals are very old. They are irregular and fragmented shape, all fragmented shapes, and they are all around us. They are the visual expression of repeating patterns or formula that starts out simple and gets progressively very more complex. Mandelbrot set is very common. You might have seen it, but if I'm not going into detail of fractals, because if I go on, I will continue for like hours and hours. I won't stop. All fractals show a degree of self-similarity. This means that as you look closer and closer into the details of fractal, you'll see more replica of it. A phone is an example. Multiple galaxies are example of it. Snowflakes, sand, tree branching, lightning, peacock feathers, our circulatory system. Even in music, people use fractals. Pink Floyd does that quite a lot. Repeating patterns. you can use even while studying genres of music, like for example, blues, classical, rock, or jazz. You can just go on and on about fractals, but I'm not going on explaining much about it. You can research it. Fractals, and there's a correlation between fractals and chaos theory. Chaos theory is a part of game theory. If you're into finance or economics, you'll know this. Fractals form part of the visual identity of chaos as infinitely complex objects that are self-similar across all scales. They represent dynamic systems. Example of I'll give you example of chaos theory. If a butterfly flaps its wings in Mexico, there's a chance that we might get a hurricane in China. Now, a recent example of this theory. Someone in China decided to keep penguin and bat together, and someone decided to eat it. And after 6 months, the entire world was at a halt. COVID-19. This is an example of chaos theory. Uh, uh, Corona, and it destroyed a lot of economies and businesses. Now, from this fractals, this Frama indicator, like I said, I will come back to Frama indicators. Frama indicator was created using fractals, fractal price theory to adapt itself. This, as the name suggests, is an adaptive moving average, and it was constructed. This indicator was developed by John Ehlers, constructed based on the algorithm of exponential moving averages, in which a smoothing factor is calculated based on current fractal dimension of the prices. Now, coming back to fractals, and then we'll go back to charts and we'll stay on the chart. Now, see, whenever fractals, whenever there's a chaos in market, for example, Ukraine or Corona, there was a big scare and the market fell. What happens is there's a balance usually in the market between the long-term investors and the short-term investors. Whenever the market is going right and there's enough liquidity and stability in the market, but whenever there's some situation like unforeseen situation where that something is going to happen, for example, Ukraine war, the market fell by roughly about 2,000 points in one day. What happens is the long-term investors, there's no balance between long-term investors and short-term. The long-term investors will not go too long. They will prefer being short, and even the short-term investors are short. So there's less liquidity and instability, and this is how market falls. One more thing about fractals is there are feedback. It works as a feedback loop. The output of one is given to the input. For example, if you're buying or selling stocks, there's a news in market that HDFC something is merging with HDFC Bank. So what happens is you will keep on buying. The market will go up and up and up, and suddenly it might fall or it will stay there. Now coming back to fractals. Fractals are everywhere in the market. If you consider smaller time frames and larger time frames, the frames are very similar. You'll find the patterns very similar. Now, I'm talking about the Willam fractal, the one which I've used. In my chart, I've used like 3 bars. You can change it to 5 bars depending upon how you like it. Now, what this Willam fractal indicates is a reversal of a trend. For example, yesterday, on Friday, I was taking a trade. The price moved to 720, and then it came back and it stabilized roughly around 675 or 690. What this fractals will do is this will form a upper arrow. This is known as fractal up. It will form an upper arrow at 720, and then it might go down. It will take an average of the 5 candles around it. Now let's go back to chart and we'll say that. Okay, see, you can see see fractals. Whenever there's a reversal in the price, I'll just zoom it. See, this is the highest high formed here, and then the market went lower, but the trend didn't change. It went up higher again. That is the reason we use confluence. This is just to tell us that, let's be careful now, since there's a slight reversal, and if there comes a confluence, we should exit. So this gives early indication of what we can do in a market. Now here, for example, like I said, I changed the time frame, so this moved. I'll show you the confluence. Now here, here is the confluence. Yeah. See here, the Willam fractal gave an indication that there could be a trend reversal, and you see from the next candle, the trend reversed. So this is a very useful tool. I think you should add it to every chart if you can. And then I'm using Bollinger Band on this chart. You can use it. You can use rank delta with multiple strategies. For example, you can use it in super trend. You can use it in the alligator chart, which Praveen said. You can use it for EMA or Renko also. I'll show you a Renko example. Yeah, this is the example of Renko. This is for swing traders. Again, the time frame is 3 minutes. Now coming back to the chart. See, I'm extremely sorry. The market was closed, which is I didn't get the exact when the market was on. But as you can see here, it will give you a lot of signals. For example, 4 sell signals, 5, 6, 7, 8, and then somewhere there is a see here. You can see it has given 9 sell signals. If you see it in the live market, you will get a hint of it. Let's move to. I'll show you a confluence of things. Now, yeah, the market fell yesterday. Here we got a indication. Here we got a confluence that a market fell, and we got a signal of sell here at this time. Sell at Bank Nifty. We got it like there was a confluence of multiple indicators, and then we took a trade here again with the confluence of multiple indicators, and then these are the 1, 2, 3 indicators, and these are the 11 indicators.
Nilesh, I
Yes,
want
sir.
you to of the fractals. See, these fractals neither in your presentation nor in the previous presentation, it has not been done justice. I'm going to do it in a different way.
Yes, sir.
So please, what we want to know now is how we can trade, how we can benefit. Can you please focus on the entry exit? Now,
Yes, sir. Yes,
what
sir,
I understand is, just confirm me if I'm wrong, that you have 11 indicators. You don't need to look at all the SC charts even.
Yes, sir.
All the SC charts are available. You don't need to look at VWAP strategy chart. You don't need to look at RSI, MACD, FRAMA, ADX, volume also. That you didn't go through, but the signs of single, 2, 3, it will tell you when it exceeds 50, when it will tell you when it exceeds 125K, like that. Okay.
Yes, sir. Yes,
Plus,
sir.
we are adding 7 more indicators, which we have already discussed. So now I want you to just focus on the strategy, which is I should know when to exit, when to entry, when I should exit, what should be my stop loss.
Yes, sir.
Now there are 2 charts you are presenting. One is, I think, Bank Nifty, and the other is Sun Nifty.
Nifty.
Right?
Yes, sir.
So can you, or you have already, I see your blue lines and red vertical lines. So tell us about the entry, exit, and stop loss. If you have not done stop loss, we can do it another time. No problem.
Yes, sir. Now, for entry confirmation, you'll see there will get a confirmation from this side, the rank delta chart. I'm taking the last example of a trade on 13th May. Now, you'll see VWAP, you'll see Alligator, you see Super Trend, all are giving even this was giving a sell signal when at 1343, which indicates that there's a confluence of these 11 indicators. It was all 11 here. And then you look at the confluence here, and you can take an entry here. So total 13, 14, 15, 16 indicators gave you a confluence. that, you can go short. And then this move gave roughly about 900 plus points.
Can you show that?
Yes, sir. Just 1 minute. Can I zoom it?
See, Nilesh,
Yes, sir.
you need to go a bit slow. First of all, you have to use the blues. Blues are always entry, whether it's call
Yes,
or
sir.
long.
I wanted to use blue.
Red vertical lines are always exit. That's a standard. You are showing an entry in a red line. I'm getting confused. Go to
Sir,
the left, please. Go slowly. No, I
sir,
want to take one. Let's take this trade. Why there is a red vertical line? Is it
sir,
an exit for the previous or the entry line? Or
no,
have you
sir.
not marked the entry line?
It is also an exit for previous one.
Then you
The
have to
reason,
draw two lines.
yes, sir, there are
Okay.
two lines here, but they there's
Okay,
a,
you can draw it just very near another blue line. Can you
okay,
draw it
sir.
now?
Okay, wait, I'll draw it.
Because both are merged now. That's why I'm getting confused.
Yes, sir, yes, sir. Just 1 minute. The last one got merged. I'll draw it here.
No. Put the entry after the exit. That's better. Even if it's slightly wrong, we understand that.
Sir, actually, I changed the time frame, which is why the entries and exit got moved a little
Okay,
bit.
you can change it now.
The reason I haven't used blue and black code because the Bollinger Band, it coincided.
Can you share this chart while you're in there, please? Now let's look at this one by one. You're going very fast, and I'm really getting confused.
Yes.
Let's
sir,
go
yes,
to the left. I want you to show where the time also I cannot see. On the first entry on this one, this particular trade.
Yes, sir.
On the left, you see that's the one.
Yeah, confluence.
So I want you to start, and I want you to show, okay, we are on the sell signal on the 11 indicators using rank delta. So it is generally the sell. So no doubt about it. The market is bearish. We are going to enter a bearish short trade. Okay.
Yes,
now, the point is, you can enter at any point in time. Now, our indicators, that is chart 4.1 to C4 series, 3, 2, and 1 series, we have added these indicators, and in this chart, you have added certain indicators, right?
Yes, sir.
Now you are trading you are in Bank Nifty chart, then we'll go to the Nifty chart.
Nifty chart.
So what you are saying is, now knowing that the market is bearish, all the 11 indicators, see, at no point in time, all the 11 will be sell.
Yes, sir.
Mostly average. For example, ST1, ST2, ST3, we already know from the other strategy chart, when the ST3 is up, we can take a trade. Okay, either side. So this is the transition when you're going, when, for example, ST2 is showing, let's say, buy, and ST1 is showing buy, then you have to prepare and expect an ST3 breakout also, right? Because there's a market direction. So that's why the rank delta table helps you. Now, knowing this, we are going to use, that's what you're going to explain, Nilesh, how we make a perfect entry, how we make a perfect exit. Okay, we are talking about perfect in actual situation, because of our emotional balance, we may be not able to take a perfect entry exit. That is fine. Even if you catch 80% of that move, it is fine. So nobody, we are all humans. That's why algos have coming. They can calculate, and they can take using the same formula. They can take this perfect entry and exit. As humans, we cannot. So that is fine. As long as you capture 80% of the move, it's fine. So now what you're going to tell us, having given the scenario of this bearish scenario in this particular timing frame, how you are going to take a perfect entry and exit using your indicators. Correct?
Yes,
Am I understood?
Yes, sir.
So
yes, sir. Yes,
I'll just explain 2, 3 is enough. No need
yes,
to. And then 1 or 2 in the Nifty chart.
Yes, sir. So what happens is, whenever we have a mixed signal here, then there is a confluence. It will show up here. How many indicators are showing a confluence? People who are afraid of taking trades can look at the confluence here and then take a trade based on the confluence of other indicators here. For example, this is the entry here. Here, GI gave a signal. KDJ, there's a crossover, and Willie also gave a sell signal. So we took a short trade, and here it went up, but here you could have taken an exit, but I took an exit here. Because I knew for a fact, like, it was a sell signal on Bank Nifty. So this is how the confluence helps you to stay in the trade and take a trade. Here, this gave roughly about 900 points. I'll show you on. I've calculated it.
Show the 900 points.
Yes, so see 918 points.
What?
One more trade. During this period, like I explained in the Bollinger Bands, this is a squeeze period. Yes, sir.
Come back to the same thing. I mean, you're going too fast. People cannot understand, right? Come to the back to the same thing. We
Yes,
did not the number of examples. Let's
Yes,
attend even if it's one or two. Understand correctly. See, this exit, what happens is, how do you decide on the confluence? At that time, in real time, the rank delta will not be like this. You understand? The
Yes,
rank delta, most of the indicators will move to buy, right?
Yes,
So then the question is, you are exiting, and there may be. Can you go a little bit to the right? I want to see the chart.
Yeah.
Towards your left. So towards your left, you move the chart. You are moving towards your left. Yeah, more. I want to see after the exit what has happened. Okay, you are taking the last day, no problem. So after the exit, there may be an opportunity to go for long. So at this point in time, in real time, rank delta will not be like this. Rank delta will be showing a lot of buys, right? Okay.
Yes, sir. Yes, sir.
That is why you are exiting. You will see those 11 indicators. All these red would have turned to neutral or green. Then already 3 or 4 would have turned green. Then first is escape, that is exit. Take the point, put it in your pocket, and then think. That is how we do. Then what do you think? Okay, now how many signals are there? 4 or 5 are green at this point in real time. Then let me wait. Let me wait for this. Maybe there is a reversal in trend. Then there is a recovery or there is a call trade available. Then you look at this. You're going to show me when there is all green. One more. Then I will explain.
Yes,
when it's all green, then you take a call trade. So
and
can
one
you
more,
just show one
more
example? Have you not done that?
Yes, I have done a lot of examples.
No, in rank delta, I want to see the green.
During this period, so I don't have the screenshot of it.
Yeah, that is the issue.
Yes, sir.
That is the issue. In this period, rank delta would show green. Okay.
Yes,
correct?
Sir.
Yeah.
Sir, actually, it was neutral here during this period.
Sorry?
Sir, it was neutral here during this period.
Yeah, that's okay. But it would show
But
that.
we got a confluence here
tell you.
from other
So you have
indicators.
not captured that screenshot of that period on last Friday or whatever it is. Then you can really explain how this works.
Yes,
I don't know whether people understood. We'll wait for the questions. So do you have only this one rank delta picture screenshot, or do you have another point?
Sir, I only have this one because I got only 3 days to work with it. And
yeah, but 3 days you could have taken very.
Yes, sir, I made a mistake.
Okay.
So during this trade, if someone might have entered at 9:15 here, this year it showed buy signal in Bank Nifty. From here till the confluence here. It was a buy signal. Then there was a sell signal, and then it went neutral. It went neutral till from this phase to this phase. And then again it gave a buy signal here. And we got a move here. This was roughly about 180 points.
So let me understand this.
Yes,
How it is helping us? Let me summarize. So what we are going to do, you trade in the usual way, right? But
yes, sir.
We have to look at many charts to get all these, we are talking about 8 charts, right? Okay, which contains, let's say, this 18 indicator. Now, we are going to do, if you're trading in Bank Nifty, there's only one chart, correct?
Yes,
and
sir.
if you're trading in Nifty, there's only one chart. So we trade based on this one chart. So if you're looking at super trend strategy charts and all that, you already have this super trend strategy. you have the VWAP strategy, you have the
Alligator.
MACD, you have Pharma, ADX, everything is there.
Yes, sir.
So correctly that you remember the sell and buy condition,
Yes, sir.
which was there, and then you presented, and there was one about RS, which is about mostly for stocks.
Yes, sir. So I'll
RS
come to
can
that.
be used only for stocks and stock futures because relative strength is a comparison of the benchmark. One moment, no, Nilesh, you are moving
Yes, sir.
chart
One
while
minute.
no. Please don't move the chart while I'm talking, please. So that otherwise it will all be confused. I will explain to RS chart later. So now I will just introduce what is it, why RS cannot be traded on index, which is because relative strength is the stocks, performance of the stocks compared over index. So when that is the indicator, it can't be used over index. Okay, so that's why the RS can be used only for stocks, not for the index. Having said that, what I try to understand is that this one chart, what we do, we take the entire thing, we completely get a conviction. Okay, the 11 charts are saying one story, or 8 charts or 7 charts in that, plus our extra indicator which we have been using. So we see the confidence and we have the conviction. So even in a general bearish or bullish trend, the exact timing is given by this chart, right?
Yes, sir.
And you can't go wrong when there is 18 indicators and you consult that 11 in the rank delta, majority, let's say 9, the important indicators of like BWAP and ST and MACD is giving. So you don't need to look at all those charts or all those indicators. You just look at the indicators which are not in that rank delta, which you have added, which you have explained, 3 on the Nifty chart and 3 on the Bank Nifty chart. So you consult them, look for the confluence. So our probability, as you said, the probability game, it is improving. How it is improving? You have confirmation from these 11 indicators using the rank delta chart. Then you also have the exact timing, knowing it's a bearish market or knowing it's a bullish market, where exactly to take the trade. So that is the point. So if you know that, the probability of your success in the trade is increasing, right? This is the logic, this is the argument.
Yes, sir.
So we take those 11 things, we consult them, we know it is bearish. Now, for example, this rank delta, the snapshot at a particular point of time, show it's a bearish trend. So you know a bearish trend. But even in a bearish trend, how do you take a trade? What is the exact timing of entry and exit? Similarly, if it's all showing green here, bullish trend, still how can you take entry and exit? Because the bullish trend can continue for quite short time. So for example, dips. How to trade in the dips? When to enter, when to exit? So this is increasing the probability of your success. And then second advantage is you're using only one chart. And then you have already captured this 11. And as you know, I'm going to write a script with the help of people there in the group. Already a group has been formed to write the script. And we are going to enhance this concept of rank delta to 18 indicators so that we just have a body of the chart with candles and we don't have even the indicators, and we trade it very simple. And upon that, it can be converted into an algo also. So that is the process of evolution. Nilesh, do you have any different point from what I said?
No, sir.
So
This chart is extremely important. It will also help in the psychology aspect.
Yeah.
Like people who are afraid of taking the trade can, go with these signals, or you can see people can see a confluence here and then take a decision. If it is neutral, they can stay out of the market. If it is a sell signal, they can go down. If it is a buy signal, they can go long. And yes.
And another important thing, when it is showing neutral, this is important. You just keep quiet, don't take any trade. So that is for the beginners, it's very helpful. When Bank Nifty is showing neutral or Nifty is showing neutral, you just don't take a trade because it's a sideways market. Unless you are a deep scalper or a range trader, don't take the trade. So the probability of your success will improve when this is showing a buy. This means that is really bullish market, trending market, or vice versa. And similarly, you can look at Nifty, what Nifty is doing while you're trading in Bank Nifty. Nifty may be positive, Bank Nifty may be negative. We have seen the scenarios October, November, December last year, or vice versa. Nifty could be negative, Bank Nifty could be positive. You can consult. You don't need to look at all those charts of Nifty, Bank Nifty, and even Dow futures, right? In future, we will add oil, we will add currency swap rates, so that all those global cues also can be added to that. So the basic idea here is increasing the probability of success, number one, and second, when to trade, when not to trade. When it's neutral, it is a sideways market, so there's no point in trading unless you're a very deep scalping trader. Okay, Nilesh, is that the point you're trying?
Yes, sir. Yes, sir. Yes, sir.
So unfortunately, the only problem in this is that we didn't take this snapshot of this. It's a very dynamic table.
Yes, sir.
As it's very moving, we didn't take that. Otherwise, you could have better explained all these called bullish trades also. But nevertheless, finish it. Go ahead and finish.
Shall we move to next Nifty?
Yes, yes, please.
Okay. So here we have Nifty. I have used 3 indicators here: stochastic, awesome oscillator. Praveen mentioned it. Stochastic has been done before, and RSI, EMA. Now this is for swing traders. Just one minute. This strategy is for swing traders, like because you are using the Renko. So here during the last period, now it gave a Nifty gave a sell signal, and this was 11, and see, it just went down and down, and you could have gained roughly about 300 points on Nifty here. This is our entry. Here Nifty gave Nifty was only this was a buy signal. Sorry, 1 minute. Yeah, since it was above the super trend 711, here it was a buy signal, and later on, after it crossed this this candle, everything turned into a sell signal, and all 11 indicators gave a sell signal here. From here it went like down, and you could have exited with roughly about 295 points. Ideally, if you just use a rank delta chart with Renko, you could have entered here and you could have exited here. But since we are using a confluence of other indicator as well, we are getting an entry here, to be honest, but I'm shifting it because multiple entries and exit are getting. So you could have entered here, you could have exited here, you could have got 295 points here. Again, I'll show you a long trade. When it was here, only one super trend was giving a sell signal, because it was lower than this candle was lower than this super trend. Others were giving a buy, other two were giving a buy signal. Again, we are using a confluence, which is why we are entering here and exited. We are getting maximum points here. But if you check rank delta here, it would have this super trend would have been a sell signal. Others would have been a buy signal, and here you would have gotten a buy signal. And this would have given you.
Sorry,
Yes,
one second. Sorry, one second.
Yes, sir.
So we have understood all this because we have discussed many entry and exits, right? That's
Yes, sir.
fine. Now, there are two things I'm going to do. Because this should have been done in a dynamic live environment, if you don't mind, next Wednesday, right?
Yes, sir.
Wednesday is the most volatile day. You will do through Twitter Space, okay?
Okay, sir.
Right? We'll on this, we have Twitter also in our collaborative traders. You'll use that handle. Then, if you don't mind, really, if you can help us, you go through the trade for about half an hour and say this. Is that possible? Can you?
Yes, sir, it is possible.
In a live market.
I'll do it.
We
I'll
will
do
talk
it live.
separately about this. We'll find a coordinator for Twitter Space, right?
Okay, sir.
And then what you are going to do, select any time. For 1 hour, you don't need to trade, or you can trade if you want to, but you will use the Twitter Space and show this rank delta in real action live trade.
Okay, sir. Yes, sir.
Well,
I'm on game for it.
you're okay. So
Yes, sir.
one. Second, now you are concentrating on entries. I want you to talk about the exit only. Just one example, then we will move on to your other parts of the presentation.
Okay, well, now for exit, we are using rank delta here. So for exit, stochastic gave us a here we got a confluence of multiple indicators. For example, stochastic gave us an exit, and the even the next candle turned into green, into red. This is why we took an exit here, and I'll come to other examples here. Okay, so this is 13th May, first 9:15. Yes, sir.
No, your entry is not. Go back to the thing. Exit.
Here.
Exit. Yeah. You
Yeah.
said you are going to take an exit at the green candle.
Yes, sir.
How do you know that the next time the red candle is going to appear?
Sir, actually, I'm.
Live market, you don't know, right?
Yes, sir. Yes, sir.
So how do you say you will take an entry on the green candle? No.
Sir, signals first. We'll get a signal here or on Nifty. It will be either a neutral signal or it will be a sell signal. Then we will look at other indicators here. For example, stochastic. Then this awesome oscillator, and then again KDJ. But ideally, the entry would be here on this
Yes.
candle, here, this candle.
Yes,
but I have
yes,
placed
yes.
it here because
As it is forming, the low risk people should exit there.
Yes,
If
sir.
I'm not, I can take more risk. I will even go to the second candle. Okay.
Yes, sir.
Depending on the ATR size of your brick, if you keep 10, you can wait until the second candle also, because there's always possibility to reverse. Or it may be a dip also. The trend has not changed. It is only a drip. So we could have done. Okay.
Yes,
so
sir.
that you need to be, that's what you need to be very careful about.
Yeah.
The exit.
Yes, sir.
Yeah, but what you said is right. The indicators are able to tell us, our indicators are in advance, that the trend is changing, a red candle is going to come. I appreciate that, right? Okay.
Yes, sir.
So, but at the same time, you have to see now in hindsight, we are dealing with this chart. We are able to say, we should take it in green candle. But at that point in time, you really do not know what is going to be the next candle, correct?
Yes,
right?
sir.
So it is always exit at the formation of the opposite red color, long as you are dealing with the Renko. And that's what Ajish said in his presentation of the Renko. Remember, then
Yes, sir.
also that Ichimoku cloud and all that stuff is there. So but here you are very right. We are getting a better information. We are getting that it is already overbought. Signals are coming from stochastic. Signals are coming from awesome oscillator, and the other one, which is RSI EMA, right?
Yes, sir.
See, actually, if you see the RSI EMA, it is setting an entry. So basically, I have to look at the candles here. I'm not sure about that exit.
Sir, actually, this was overlapping. That is the reason I kept it here.
Oh, I see. Okay.
So ideally, like even for humans, like, we will take an exit here only.
Okay. Now, other thing, Nilesh, you didn't touch upon is volume. We have to look at volume.
Volume, yes, sir.
At volume, these candles are being formed, or the bricks are being formed, right? And
yes,
that will tell you a lot of things. We have not handled this volume so far. Originally, I wanted Sanadeep to present the volume profile in this session. Because of his own personal issues, timing, we changed the topic. So the week, most likely next week, we are going to concentrate on volume. Volume is a very important thing. We should always watch, in spite of all these, candles and Hikinashi and Renkos. And also that aspect, you need to also look at the volume. I'm just saying so that people keep in mind the big picture, right? If all these things goes, and that's how the best trade is taken. Thank you.
Yes,
I think you should move on to other things.
Yes, sir.
The time is up already.
Just
so.
1 minute. Just 1 minute. Okay. Now, I told you about multiple time frames and the need to observe them. Here, can you see? We'll look at multiple time frames 3 to 15 minutes, 15 to 30 minutes, 1 hour. Price action also becomes more reliable when moved from lower time frames to higher time frames. Key is to look at agreement between the subgroups of different time frames. Now I'll give you an example of this. I created a chart, 5 minute, 15 minute, and 1 hour chart. There's also one strategy known as grandfather father son strategy. I don't have much of examples of it. I don't have example of it, which is why I'm not going to going deep into it, but I'll just give you a glimpse of it. See here, this is a 1 hour chart. This is a 1 hour chart. Can you see my cursor? The last one. This is a 15-minute chart.
This is a Heikinashi chart, right?
Yes, a Heikinashi chart.
You have to say that. Yeah.
Yeah, Heikinashi. I have changed the time frames are this first chart is 5 minute. Okay, you can see. Sorry, I've kept it 3 minute. Second chart is 15 minute. You can see, and the third chart is 1 hour. This is Bank Nifty. Now, what you can see is
all are Heikinashi, right?
yes, all are Heikinashi. Sir. I just used it for time comparison.
Okay,
like,
good.
And I've used RSI here. Like I said in my previous Bollinger Band, I've given this range. I wanted to explain it, but time was short that time. So we'll use this range. Between 0 and 40, it is bearish. 40 to 60 is sideways. 60 to 100 is bullish. Now, let's go back to this one. This chart, okay. See, during the entire day, the RSI was 13th May. During the entire day, the RSI was between 0 and 40, and it touched 40 and it came back. I mean that on the hourly frame, it was bearish. It was a bearish market. We'll look at 15-minute. What happens is whenever this is a strategy known as grandfather father son strategy. I'm not going deep into it. I'll just explain. Whenever your grandfather does something and then your father does something, the son will follow. So here the RSI was below 40. After that, hello, sir. Can you guys hear me? Avinash?
Sorry. Yes, Nilesh, continue.
We can hear you.
Yeah,
we can.
I was
yes,
just saying, in this chart, 1 hour is the grandfather, 15 minutes is the son.
Father.
Father, and 3 minutes is it? The first
son.
one.
Yeah, 3 minutes is the son. You can change it to 5 minutes also. This.
So you get a bigger picture with the grandfather trend. You find out. Then you go to the middle chart, the shorter time frame. Then you go even to the left chart, which is further short time. Then you take the trade within the broader picture of the trend. Is that what you're seeing?
Yes, sir. Yes, sir. See, this 1 hour, we were at 13:45. Now, if we come here, 13:45, the RSI went down, and it was already down. So grandfather pulled father down, and then at the shorter frame, the market went down and it just went downhill after that 900-point move, which I mentioned earlier. So this is the chart. I've only used RSI for comparison, RSI and Heikinashi. I could have used bands, everything, but this is just to explain the why multiple time frames are very important, and why whenever you do buying options, or you shouldn't use a single time frame. I have learned this recently, and whenever you ask someone who's experienced at option buying, he'll tell you the same. Don't look at the single time frame. Use multiple time frames. I mentioned earlier, 9:15 to 9:45, you use 1 minute time frame. 9:45 to 10:30 or 11, you use 3 minute or 5 minute time frame, and then you can increase it to 15, 1 hour. And during the ending session, for example, 2:30 to 5:30, you can use again 1 minute or 3 minute time frame. Now, one more thing about rank delta is you can. I'm just changing this chart. So now, talking about relative strength, so should I go for it? Now, we always talk about Bank Nifty and Nifty, but rank delta allows us to trade in stock.
Sorry, once again,
yes, sir.
We are nearing 11:25 now. So then Sanadish has to speak. Let us do one thing. Leave this RS concept stocks. What we'll do when we present for a separate for stocks and stock future trading, then we will do it. I'm sorry, Nilesh, I know you prepared this RS. But I think we have to leave in terms of the time. Are you
Sir,
okay with it, or you want to just say?
Sir, I'm okay with. I just want to see. This is a very important concept. People, if you have any questions, just shoot the questions. I'll take it and I'll explain it shortly. Even Jagan sir will help.
Yeah, let's not do that RS stocks.
Yes, sir.
We'll do it separately as a separate session on stocks trading or stock trading, stock future trading. At that time, this RS concept will come. And also there is this, one of my friends who is Premal. I don't know whether you heard of him. He has got a group called RS Warriors. So he's my friend and he can also come and present, but I don't know whether he's too big and we are a small group. I don't want to misuse his this friendship. But anyway, we will not touch upon this. Leave it for questions. Then we will move to Sanjay.
Yes, sir. We'll ask. I have seen some questions, box size and those things. I have kept it the same thing as it. You get it with the indicator. I haven't changed it. You can change it. You can watch Ajish's video for Rencos. Anything related to rank delta or anything other than that, please shoot your questions. You can unmute and just ask me questions if you want to do that.
Have you answered all the written questions?
Yes.
Nilesh,
Yes, sir.
Nilesh, in terms of rank delta, there have been few questions which have been common in terms of when you count the number. I mean, like say for example, on the first box it says cell 10. How do you count that?
See, you count it as 1, 2, 3, 4, 5, 6, 7, 8, 9, and there's 10th.
Okay, so some places earlier in your example also, there are, say for example, in the third one, it says 2, it has got 2 plus signs, right? So you count that as 1 or you count that as 2?
No. What plus in ADX and RSI and here means is, I have explained it. If it is a weak trend, it will be between 0 and 25. If it is a strong trend, it will be 25 to 40, and above that it will be 40 to 50. So if it is between 25 and 40, it will show a plus sign. Above that, it will just the plus only indicates how strong the trend is.
Okay.
Yes. Even for RSI, if it is between 60 and 80, it will give you a plus sign. Here it gave you a plus sign.
Okay. Prashant had this question. Prashant had actually brought it up as count double pluses as 2 and triple pluses as 3. That's not the case, right?
No, it only indicates how strong the trend is.
Okay. And
for
these
ADX, yes, sir.
And these plus signs will appear only in ADX, is it?
Yeah, plus sign ADX and RSI, because RSI also is a range bound. For example, if it is between 60 to 40 to 60, it is a uptrend. But if it is between 60 and 80, it is a very strong uptrend.
Okay.
Then you will get a plus sign.
Okay. Okay, got it. Mahesh has a question. I think it's related to the same thing. The total indicators are 11, but why is it showing 12 for Nifty?
That is because of the volume.
Okay. Yes, volume will also tell you, it will also give you a signal that, okay, you should buy. It will add up here and it will tell you, okay, you should go for it.
Okay. Okay. Great. I guess all questions answered. Yeah, Saurabh has a requesting Nilesh to have a small session on MTF, multi-time frame analysis and future.
Yes.
Saurabh, sure. I'm like, I was just about to say that, the topic that Nilesh has picked up, I mean, like, I don't think it's complete justice in just 45 minutes and an hour's time. Also, he needs a lot of more time. And thanks, Mr. Jagan, for chipping in and, just helping up further explain the whole thing. And Nilesh, you've done a great job. Anything else? Any other questions from people? We're running
If
out of time
anyone,
right
see,
now.
this
Yeah.
concept is very important. We are going to develop on
Yeah.
this concept. We are going to start phase 3 with this concept. Please ask questions. I'll answer them shortly and then I'll move it, give it to Sanadeep sir. Just unmute and ask questions if that is possible.
Naga Venkat, how many minutes we need to wait after entering the trade based on rank delta buy sell signal?
You don't have to
That
wait.
depends on the market. How can you say? Yeah,
See,
I mean,
I'll explain,
all
sir.
of you. It depends on the you trade the market. It can take, if you're a scalper, you get it out in 3 minutes, but you will get out only 20 points. If I'm a swing trader, I will wait for 45 minutes, 1 hour. I will get out with 220 points. So that depends on your trading style. Not only your trading style, it depends on the market. We can't predict how many points, what is the trend, what is the direction. So this all will depend on the market condition. Exits are never given in advance. It is not that, that's why I never advocate this profit target concept. So you get 2% profit one. I never advocate that. I always advocate that trade based on the market. If it is strong, it's going to give you 800 points. Why should you leave? You must take the 800 points, put it in the pocket, not because of just greediness. It is because on a worst day, when you're going to lose, these 800 points will save you, number one. Second, once you have 800 points in your pocket, you can take any risk. You can even take risky trades for the rest of the day and you can play with the market. So that gives you a lot of confidence to trade. And the more you take, the most reward you will get. And for more risk for you to take, you have to have more points in your pocket. So does it answer the question?
Yeah, I'll summarize this. See, on a chart, we have VWAP strategy, we have alligator strategy, we have super trend strategy, we have indicators like ATX, RSI, MACD, FRAMA, volume. All this will help you. This will give you a very strong confidence, and even if you're not prepared for a trade, for example, if you're afraid of because of your previous losses, this rank delta is a very important indicator. It will help you take those trades. I don't know if I did justice to this, but I use this indicator. Please use this. It is a very good indicator, and we are going to build up on it. And I'll do a session on Wednesday. I'll talk to Jagan sir and we'll plan something, because this requires a dynamic market, like Jagan sir said. These values, these keep on changing. The sell signal, somewhere there you'll get a buy signal, somewhere you'll get buy plus, sell plus. We can only do this in a dynamic market. I'll try my best to do justice to this indicator.
Okay, Nilesh, thank you very much.
Yes, sir.
Sanadeep has a very interesting topic. We are all eager to gain. Yours is good. I'm sorry about Nilesh. Personally, I need to apologize. I told you to do that RS and you worked for it. Now I'm saying postpone. So
no, sir. No, sir.
Yeah.
I would like to thank you, because I got to learn a lot of things because of you. You probably one of the best teachers I've had, and I'm learning a lot from you. Thank you. And thanks to this people who contribute to this group, Avinash sir, Rajesh, Sanadeep sir, everyone. Thanks a lot for giving me this opportunity.
Thanks a ton, Nilesh. We're moving on to the next speaker. He's going to be talking about best practices for trading, myths and biases in trading. Next up is Sanadeep. Sanadeep, you there? Please share your screen.
Yeah, hi, Avinash. I'm there.
Hi.
You're able to hear me?
Yes, loud and clear.
Okay, loud and clear. Let me just share my screen. Okay, got it. Let me know if you can see the screen.
Yes.
Okay, cool. Hi, everyone. Good. Still, we are in morning. Avinash, one question before I start.
Yeah.
How much time do I have, considering it's already 11:35?
Mr. Jagan, about half an hour. We've already, the heads up was already given today that we're going to be half an hour late today. Extended session today for half an hour.
Say this. We are going to have up to 40 minutes of time. And people, I mean, I did give you a heads up. People who wants to leave, I can understand, no problem. They can leave and they can watch the recording later. But the justice should be done to the presentation. So we will go on for another 40 minutes.
Okay, cool. Then I'll start that. Okay. Hi, everyone. So today I'm not going to talk about any charts, any strategy, anything, because it's already been done. So this is a very interesting topic, and this is a topic which I think we all need to master. If we don't do this, no matter what strategy we follow, no matter what setup we follow, at some point of time we will end up in in a situation where we'll get frustrated with ourselves. Will not be able to take a trade properly, and it brings a lot of doubt in our mind whether we do right thing or not, whether we are on the right track or not, and those kind of things. So what Jagan sir and I have tried to bring some of the information purely from a practical perspective, so that we can implement it. There are a lot of theories around everything circulating in different channels and everywhere, but what we are trying to do is something which we can use, a very small thing that we can do, if that helps us to manage that. And these are the things even I am practicing. I'll not say that I practice everything, but these are still some of the things that I do. So with that, the topic is trading execution. So we are completely focusing on the execution side of it, not on the concept, strategy, and other things. What are the myths and biases? Because myths and biases are very important thing. We can't live without that. But at the same time, we need to acknowledge, be aware, and handle it. And then at the end, I'll talk about some of the best practices that we think that that will help everybody. So starting with the first slide. So I'll spend some time on this one. I think this is a roller coaster of emotion that everybody goes through who is in the market. Though investor or long-term investor, they go through it in a month, in weekly, or 6 months or year time frame. We as an intraday trader go through it every day, sometimes multiple times in a day, right? So this is a typical flow of the market, and how our emotions move. This depicts a very clear picture of that. Please tell me if you don't agree with this one. I'll start from the left, that when the trend is moving, we say, oh, now there is a trend, let's watch the market, we might get an opportunity to enter here, right? And the moment it comes here, we said, okay, if I wait any longer, I might miss the trend. What will happen? Should I enter here or not? And suddenly it goes flat. Then it's, oh, luckily I didn't enter, right? Otherwise I would have not got the right opportunity. And then market starts moving down. Now when the market starts moving down, we start getting into the emotion. Okay, if it comes to my this price, I'll start buying it. So it is coming down, this is coming to my buy price, so this is the right entry for me, and I'll take an entry over there. I'm just talking about emotion that goes through. I'm not talking about all the confluence and other thing that we need to check. Now when you come here and you take a trade, and then suddenly you see this further going down. Now when it starts further going down, you start getting doubt. Oh, what is happening? Why is it going down? Did I not do my analysis properly? Did I not miss something? Did I not look into all the confluences and everything? And when it reaches to this level, we lose our patience. Oh, enough is enough. Now let's sell this. Though this is wrong, we could have sold earlier, but still our emotion forced us to come here, and then we sell it here. Then what happens? It further goes little down, and we start talking to ourselves and say that, oh, luckily I sold over, we managed to manage some of the losses. Then market turns. Now market comes over here, and we start saying, okay, now it will fall, let's buy, sell it. Market further goes down, you say, oh, what did I say? Market definitely fell. Now it will fall further, I'll make money out of it. Didn't happen. Starts moving up. Now again we are getting into a doubt phase. And then market recovers and comes to the same level. So where we started, where we ended is more or less, from a market perspective in intraday, it is same. But our emotion has gone through a complete cycle of excitement, greed, fear. You talk about any emotion that comes in, it is what we encounter on a daily basis. So this picture, why I wanted to talk about, is this sets the context of what we're going to talk about in today's presentation. So with that context, what we are going to talk about next is, how do we execute our trade like a professional trader does? They don't, they do properly, right? They have a system in place, they have everything in place, they have knowledge, they have skill, they have training, everything is there, right? So how do they do that? And we are trying to capture some of those points. There are 4 major things that we think that it may help. Is first is gain the knowledge before you start becoming scaling your positions. Second is recognize your trading biases and the myths and learn how to handle it. because without recognizing, you will not be able to understand the importance it plays in your trading decisions. And those biases and myths, we all are biased in some form. We may be, positively biased, negatively biased. It depends on, how we are looking at it. But definitely, we all have some biases. And there are certain myths in the market also, which has been there for quite some time. We need to understand that, be aware of it, and then see how we can handle it, because this will remain there. Tomorrow also some more, myths might come out. Third thing is, what are the key characteristics of a good trader? If you understand that, let the emotion and ego go out of it and try to understand how they do that, and try to learn from it and create a very strong trading practice for ourselves, and follow good practices of trading. I didn't call it a best practice, I call it good practices, because sometimes good practices, if you follow properly and if you have mastered it, it becomes a best practice for you. It may not be best practice for others. So like a professional trader, train your mind to do that. So these are the 4 major pillars that we think, from an execution perspective, we should think about it. And there's a very important statement below, which says, why so few people in market make it as a trader? Because they simply don't do the mental work necessary to reconcile the conflict that exists between our already learned and the beliefs, right? Whatever our learnings are and whatever our beliefs are, market contradicts that, and it acts as a resistance for us to become a successful trader. So that's why so few people make it as a trader. So this is the context with which, and this came from, a book, a very good book. If you guys get a chance to read that book, Trading in the Zone by Mark Douglas. It clearly simplifies, why as a trader, not everybody becomes, successful. These are the things that, because it's a conflict with our own upbringing, our own thinking, whole life we have gone through a certain thing, right? Belief and everything. So this is, it is important from that perspective. So we'll move to the first part. There's a knowledge part of it. See, learning how to trade the financial market begins with the education. You don't have to, gain knowledge about everything that is there, but at least, if we know, we'll be in a better position to decide what to take, what not to take, right? And the very important thing is that, any profession you take, right, that takes some time. Like, if you want to be a pilot, you need to spend at least 2-3 years of training, or 1,500 hours of flight time. If you want to become an engineer, we spend 14 years of our school education, and then 2 to 5 years of our technical training and other things, right? Then we want to become a lawyer, or you want to become a doctor, you have to do the same thing. But when we want to become a trader, what is it? Oh, I have some money in my account, I can start tomorrow. There's no experience required. I think that is where things goes wrong. And the knowledge is very, very important. With that knowledge, start very small, do or understand all the aspects of the market and practice slowly. Take one trade in a day and see how that goes. And slowly, you'll get the confidence, and then you start building on that. So learn everything, if not in a deep, but at least from a concept perspective before deciding on your method or strategy. Because you don't know what you don't know, right? Unless you experience that, you don't know. Like, alligator strategy that, we talked about today. I was not aware of it, to be very frank. I knew there is something called alligator strategy, but I didn't know so much. So now today with this presentation, I came to know that, okay, there's something I can consider, right? And then once you decide on that one, do a practical experience of trading before, you increase your position size. And the basic thing that, generally we can do is whichever setup we take, we should research about that, and we should challenge that setup. That is very, very important, because the way generally, I look into it, when I take a strategy, I said today is a Tuesday, suppose. Today market is doing this, whether this setup will work for today or not. And I take only one lot, but at least I check that, the strategy works for this kind of market or not. And if you do that multiple times, you get a confidence. Okay, if Fridays are range bound, then we need to use Bollinger Band strategy. If this is someday, what strategy to be used? So these are the things that, that helps you. And that's how you gain the knowledge, right? Learning never stops in this industry. You have to keep doing it, right? Once you do that, that only completes the first leg of your journey. Rest is very important, is how do you manage your trade and how your psychology plays a role in that, right? So these are the 2 things that we will talk about next, right? So now moving on to the next one is the myths and biases in trading. behavioral finance is full of, treats everybody as a normal thing, right? Person who comes into the trading market. But their decision making is based on sometimes biases or errors or some myth is there which is not correct. So based on that, people take decisions, and that's how, it impacts the, the trading decisions that we take on a day-to-day of basis, right? Sometimes we get blinded by the myths that are there, and which results in the error that we make in our financial decisions, right? So from that perspective, there are top 3 myths, as you can see over here, and Jagan has shared that in the group also. Some people have the view that trading is getting rich quicker in the business. I think it is not correct, right? Because if you think that you can take profit quickly and fast, the same thing is applicable for loss also, right? If you start falling very fast, and you lose your capital and other things. So that's why it's a myth on that perspective. Lifestyle, right? We all are living in a laptop lifestyle. That means work from anywhere. But you can work from anywhere from an execution perspective. But how about understanding how the market works? How to the decision making process that we need to go through? It takes a lot of discipline to achieve that one. So this is a myth that, I am a trader, I can work from anywhere, sitting on the beach, sitting, in Burj Khalifa, and, we can do the trading. I've seen people saying that at a traffic signal also I've done the trading. Those people can do it because they have mastered the skill. But if you're not mastered the skill, even if you sit with, anywhere, you won't be able to do that, right? So the knowledge is that important for that. Now, trading is same as gambling, the other one. Well, gambling, if you don't have knowledge about the market, and if you have proper education, then you understand that when to take a risk and how much to take the risk. That is where the difference between gambling and trading comes into picture, right? Both are game of probability. Probability game is played in both the scenarios, but here you have the knowledge. And in gambling also, there is a probability, but there is a rule to it, right? People follow a rule. That's why the professional gamblers are profitable. Whereas when we go to gambling, casino and other things, we are not so profitable, right? Sometimes we might get profitable, but other times we lose money and come back, right? But they follow a set of rules and they keep doing it again and again because their market or it's a sample size is so big, right? Because of that, they know that 10 or 2%, 3% I lose, but at least 60, 70% I'll make money out of it. That's how the thinking is. So, right? So trading is gambling if you think like that, but if you have knowledge, you know how to manage your risk, how to take a calculated risk. It is not. It is you can learn from that, and that's what we are learning, right? With all these setups, all the strategy that Jagan sir has shared with us. This is exactly what we are doing. Right? We are gaining knowledge. We are understanding about different indicators. There's so many indicators which we didn't know 1 month back, right? 1.5 months back. Now we know that. But now we know how to use rank delta. So we'll start practicing it. So those are the things that we can do, going forward, and that will help us to become more successful as a trader. Right? Now moving on to the biases part. Right. So we need to also understand our biases, because biases is something that is between you and your profitable P&L. Because if you are strong-headed, if you don't understand what market is doing and still following your instinct, you may not be profitable because market might be doing something exactly different, right? And what happens, regardless of how disciplined you are, we all have some behavioral biases. It is a fact, right? We do have biases, and sometimes we let our biases take control of ourselves, and we may end up making losses. Like, I think if I remember Thursday, I don't remember the name, we were talking about it, that the market was going down, but somebody took a long trade. That is an example of a bias, right? That you have looked into the previous day data, you have looked into something, and you have made a mind that okay, today market will go up, and you're looking for only those opportunities where a market is trying to go up. A very simple example is 3 candle red and 4th candle green comes. We think okay, now market is reversing, we start moving in that direction, and then we realize okay, again 2 red candle has come. So these are the behavioral biases that comes into the picture when our emotion takes over our the knowledge or the skills that we have, right? It is not bad. You still need to be aware of those biases, and you need to know how to handle those biases. That is very, very important to reach to a decision-making process which is impartial. The market is not doing anything wrong to you. Market is doing what it's supposed to do. It is how we perceive the market, right? That's what we need to look at. And from a behavioral science perspective, there are four major behavioral biases that we all have. We fall into in one of those category or maybe more than one category. So these are the behavioral biases that we'll talk about. Which falls under these four major categories. Overconfidence, as we all know, at sometimes we become very confident, thinking, okay, I know what market is going to do. I have enough information and I know when to enter, when to exit. So I'll follow that. That's overconfidence. Because market can change anytime. That's the fundamental thing of market. Sometimes we have an attribution bias. We'll talk about that also. Then sometimes people are so aversive about the loss that they sometimes see the opportunity, still they don't enter. Sometimes they enter into the opportunity, and if it starts going down, they start averaging. That is also thinking, okay, I'll make it out. I'll make it out. So those are the things, the disposition defect, what we call it. Third thing is misuse of information. We know there's so many information there, and even looking into the chart, we sometimes look into a particular price and we think that, okay, this is the price, when it comes, I'll enter. And market will come 10 rupees before that and it turns, or 20 points before that and it turns. We still wait for it, thinking even though all the indicator is giving a indication that it could move in that direction, it will not come that further down. You have to enter at that level only. We still wait for it. And what happens? Market moves up, never comes to that level then. So by just 20 points, you miss that opportunity. These are some of the biases, in terms of information that we look into it. And the most fundamental thing is the media bias. This is the attention bias, right? Media creates a lot of hype around everything. Like, when the results are about to announce, you'll see a lot of, media, news, like LIC IPO is an example, right? It is like that. That's how media plays a role in our behavioral biases. I'll take one. The first one is the overconfidence bias. This is basically illusion of control and attribution bias. Now, illusion of control is the biggest trading bias for a technical trader. Someone who purely depends on technical, they generally get biased with this one, right? Self-attribution is when there is a successful outcome, we think, oh, our analysis was so good, I'll do that. What I did is correct. When things go wrong, oh, market didn't listen to me. Someone, the big guys, smart money played against a stop loss hunting started, another thing, right? So these are, we give it to the external factors, but chart or market doesn't do anything. They do what they're supposed to do, right? So same way, Mark Douglas has said in the Trading in the Zone that the typical trader, they do not predefine his risk, cuts his losses, or systematically take profit, because a typical trader doesn't believe it's necessary. Why they don't feel it necessary? That's the overconfidence bias. The only reason why he would believe it is necessary, it is not necessary, is that he believes he already knows what is going to happen next, based on what he has perceived is happening in any given now moment, right? Where he sees the chart, he sees the data, he says, this is what is happening, it will happen like this only, right? That's why he doesn't take, proper risk and stop losses. He doesn't define, where, how far he can go, what is the risk and reward he can expect. Those are the things that he misses because of this bias, right? Why it is so? If he already knows, then there is really no reason to adhere to these principles. That's what he thinks, right? This is the bias that is there, right? So believing, assuming, thinking that he knows will be the cause of every trading error that he's going to make in the trading career. So this is a very important thing that we all need to recognize. We all need to understand that, what we can do, what we cannot do, right? How do we handle it? We need to stay focused on the results and the statistics. And how do you do that? By maintaining a trading journal, make entries every day, whether it is a profit, loss, every trade that helps you to give some learning, make an entry and keep analyzing it. That will tell you whether you are falling, you are falling under the overconfidence bias or not, and how to handle that one, right? Moving on to the next one, loss aversion is the other side of the overconfidence, where we have fear of loss. We don't take position thinking that, okay, I might incur a loss. We don't look into the equivalent return that we'll get. Sometimes the fear of loss, we hesitate to, exit. We keep, holding the position and other things. Those are the things there, right? And why it happens? Because market is full of probability, right? The most effective and the functional trading belief that a trader can acquire is anything can happen in this market. So when you enter a trade, don't think that now it will go this far. Jagan sir was saying, right? We cannot define exit because we don't know what will happen. Anything can happen anytime, right? So this is a game of probability, right? We believe that anything can happen. That creates a mindset that, we need to think in probability. So this is what we need to keep telling ourselves every day. Even though you're not trading, if you're, out, keep thinking like that. This is the most essential and the most difficult principle for all of us to grasp and effectively integrate in our mental system. If we do that, I think then we realize, then we understand how the game of probability needs to be played out, which is entirely different from, our professional career. If you think professional career, if something goes wrong, we have something else to blame. We have always there to, somebody has not done something, that's why this cannot be done, right? But here you don't have. You are the only one who need to decide that. You need to take action and need to be responsible for your results. That's what it is, right? Now, market behavior, right? This is another very important concept that he talks about, is that the most fundamental characteristics of the market behavior is that in each now moment, in each now market situation, the behavior pattern of that now moment, the edge that you have from a setup perspective in that now moment is unique with its own outcome, which is independent of any other trade that you take. So when you're in a trade, you have taken a trade for that now moment and following your behavior pattern at that time. Your behavior pattern might change, but at that time you had a behavior pattern and you are using an edge, setup edge that is there, that is giving you signal at that now moment, which is independent of any other trade that you might have taken, right? So this is another important concept that we all need to, inculcate in ourselves and see, how we can take it forward, right? So how to handle it? Again, take calculated risk, weigh all your options based on risk and return, and then go into the trade. This is how you can handle this particular kind of bias that way. These are the two very important things that if we are able to handle, overconfidence and loss aversion, you will be able to make progress. This is what I think. At least, I am benefiting out of it. Now comes the misuse of information. That is where, the anchoring bias, recency bias, or gambler's fallacy. So what is anchoring bias? Is that, you have decided a price in your mind and it acts as an anchor in your mind. And you keep thinking, oh, okay, it comes to this level, I'll do this. But sometimes, it will change. Sometimes you think that, okay, it's going down, I'll average, and at this level I go down, but it goes further down also. But we keep on changing our stop loss. These are the anchoring bias that we are talking about, right? Now, sometimes our past experience also helps us, tells us that, you need to do this one. Sometimes we exit too fast, right? Because the last time it went out of this one, right? So this is what I sometimes think, that when Jagan sir said that we have created a mental wall, these are the walls that we have created in our mind. And we need to work on that, get rid of those things that we have learned, which might not help. So this is the unlearning process that we need to go through, right? Last is the gambler fallacy. This is, we all know, right? I have seen so many people, there's a triangle pattern forming, there is a, wedge forming, there is flag pattern and other thing. So sometimes we see pattern which doesn't exist also. So unless you're sure about the pattern, you practice it, you know that this is how it will work. If you talk, there's a pattern forming, sometimes we see something which is not there, right? So this is important. And, and the right thing he talks about, right? That we might fall into someone telling us what needs to be done and we create an impression out of it, right? Sometimes we lose money because we go live or we take trade too early. Sometimes we become lazy. Sometimes it happens, the mental freeze happens, right? And we become overwhelmed and alone on that, right? So how to handle this kind of thing is acknowledge again, acknowledge the mistake that you're doing and adopt a critical thinking. Always ask, why should I do that? What is it that will get out of it? And then you'll start, looking into the market, and your approach towards the market will slightly start improving or changing for the betterment of you, right? So like, falling knife, price is falling, and in anticipation that it will not further, we start, averaging it. That's another example of the gambler's fallacy, right? Now, the last one is the attention bias. This is where our, media plays a very big role. Media has a role to, in our trading activity. But that doesn't mean this is the only thing that we should look for. This is also one of the parameters that we can consider in our trading decisions, right? Beware of the enemies, though I don't call them enemies, it's just beware of them, what they're talking about, and make sure that, you do your validation before deciding on that, right? People say, no, I think Warren Buffett said, right? Buy when everybody is selling, sell when everybody is buying, right? When everybody is bearish, you become bullish. And when everybody is bullish, you become bearish, because things will change after that, because that's how the institution, other things will play, right? So this is what, it talks about from a media bias or the attention bias perspective, right? These are the four major biases that we talked about. And we'll share this if you want to, look into this one. We'll share this as a PDF. Go through it, keep it as a ready reckoner, and keep reminding yourself.
1 minute, Shanadeep. Thank you very much. It is that book also. I read it mostly. Yeah, there are other books. See,
Right.
fundamentally, just while we are on the topic, there are 180 cognitive biases that have been observed. Now, we can't deal with 180. Neither we are psychologists or psychiatrists, but people have to understand this. Number one. Second, this bias is not only about trading. It affects our life, even without our own knowledge. This principle, whatever Shanadeep talked about, except two, after this, I would ask him to talk about two biases, which I thought he has included partly, but I think that is important. I don't know whether it's a name, at least I've noticed that bias. I had that bias in the beginning. I rectified it later, okay, when I identified. So see, the biases we can be in our life. For example, I lived and worked in Africa. Now, I was attending a conference in Tanzania. Dar es Salaam is the capital. It is neighboring country, Kenya, Nairobi. Some people think all the Africans who are blacks are dishonest. People in the US, there is a survey showing that this is what majority of the white Americans think. It is wrong. I've lived in Africa for 8 years. I know it. It is completely wrong. Second, I lived in Israel and worked in Jerusalem for about 6 to 7 years. There, you must look at the people. There is a bias called the women are weak. You go to Israel and you go and deal with those women in a traffic, and every alternative day, I used to have a argument with the Israeli women, Jewish women, and believe me, they are so strong. In supermarket, in traffic jams, I always encounter, there's a lot of jokes about the Israeli women, how strong they are. So what I'm trying to say is, let us not be a frog in the well and think that the whole world is like where I am. I should not think the whole world is like Chennai, where I'm staying now, and then go to Singapore. No, when I go and land in Singapore, I completely change. I can't have that attitude. So please read more. As I said, there are 180 biases. We are not professionals. We are only trying to highlight this particular thing I wanted to have by Shanadeep particularly, because now you guys know why Shanadeep is making good part of the day's range, which the data which I keep on posting. So you now know, because he is aware of these things. First, become aware of. That is the starting point. Become aware. What is that bias I have? Look inside. Take help from people. Take from friends. They call it 360 degrees feedback. You have to get a 360 degree in big multinational. We have this 360 degree, which means your subordinates or people whom we are reporting to, they give you a confidential feedback. People above give you a confidential, your bosses, and the people who are working in the same, your peers, they give also. Then when you read that one, the whole world's open for you. Oh, I never knew. I thought like this, and this is what this has been understood. So your biases, you can't hide. It will come out. Even your body language, the way you speak, the way you walk, it will tell you what is your bias. Your comments, which you can't control, and people will observe. Okay, so that's the point. Now coming back to Shanadeep's presentation, Shanadeep, can you just say a few words about this continuity bias? I'm sure you have read it, and part of it you deal with that. After that, we can close this particular topic.
Not sure, sir. I am not very clear about that.
What I mean by continuity bias, we assume that the trend will continue. We assume the good life will continue. We'll assume that the summer will continue. We don't believe that the winter is just around the corner. So what we do is this particularly, that's why we don't exit. Why many people, they make good 300, 400 points, they lose everything. Why they lose everything? They have made 300 points, the market is going, suddenly one algo candle, red candle appears, it takes away all your 400 points. That's all. So this is this continuity bias that you will keep on assuming the trend will continue, or whatever the good things are going or the bad things are going, that will keep on continuing.
Yeah, I've done a mistake
Anil mentioned
that,
about periodic taking profits at stages, right? That is what I do all the time. I do take profits. I exit half my quantity, which you have seen me in my posting, first 50%, 25%, depending on the market. I keep on booking profits, right? And when the market is also cutting the losses. So that I think he's going to deal with in best practices. Chanadip, is it okay what I'm saying? Yeah.
Yeah. I wanted to give an example, my own example.
Okay, please.
In the month of January, till December we are falling, right? And January, suddenly 4th of January or somewhere, we got bullish run of the market for at least 3 or 4 days continuously. So first day it went up, and second day I thought, okay, today also it will go up. Likewise, second day I got, third day also I was biased and I was following that one. Fourth day, suddenly what happened? Midday it just dropped drastically. And every time it was dropping, I was thinking it is reversing. So I started doing averaging. This was my mindset at that time. And it fell by almost 700 points. And that day, I think if I remember correctly, I lost almost ₹1 lakh. Right. So that was very clear. I was thinking that, okay, it is just reversal, it will further turn down. I keep on averaging there. And that's the lesson I learned, that I'll not go by what I'm thinking. I need to look into what chart is telling me. And luckily, when Jagan sir started explaining all those things, I started making sense of it. I started relating to my own experience in that. So just that example I can add to from my own experience.
Okay, go ahead.
Yeah. So we move to next one. So now after biases, there's always a thought, right? How come others are others are gaining more points? How other people are successful, but I'm not able to do that? This is a question we all have in our mind, right? So what are the things that we need to look at? What will help us to become like them? If not like them, at least closer to them, right? Because they have been doing it for so long. Might have just started, we might have just 1 year or 2 years of experience in this, right? So what are the key characteristics that those successful traders have? So basically what we understand, there are 5 major things that they do, and they don't compromise on any of these 5, right? First is they want to be consistent not in their profit or loss, consistent in their approach, consistent in their process, believe in their process, right? They stay consistent in that no matter what happens, no matter whether the market is following it or not, because a setup always tells you when to enter, when to exit, or when to where to keep your stop loss. They don't compromise on that, right? One other thing that I generally used to follow, and I still look into that, is that I ensure that every day you will not make profit. Sometimes the market will go down, sometimes you will have your own biases because of which you might make loss. But ensure that you close the week in positive by taking the right trade, and by staying in the right trade, and by exiting from the wrong trade as early as possible. You cannot do it every day. Sometimes someday might go against you, and sometimes something happens at that time where some personal thing comes and you miss that opportunity, right? So those kind of things will happen. So try to keep a track of whether the week you are closing in positive. When I say closing in positive, not by just the trade that you have taken, include the brokerage and everything. Your P&L need to be positive, right? If you find that 2 weeks in a row, and that's what I generally follow, if 2 weeks in a row,
there is a request to increase your volume, Sandeep. Sorry to interrupt.
Okay. Is it audible now? Clear?
Yes.
Okay.
Yes.
So
Very much.
what I do that, if 2 weeks I go in a red, I stop. So suppose if I'm doing in a 4-week, 4 lot of trade I'm taking every day. If 2 weeks I go in red, I reduce it to one lot. I start it again. I review what is it that I'm doing wrong. Can I change something? Can I improve on that one? So I go back to one lot and again start from over there. I don't stay at 4 lot at that time. So that is, first I want to ensure that I'm right in my mind. It gets into my subconscious mind. Unless it gets into your subconscious mind, sir, you want to close your camera?
Sorry,
Hello?
what did you ask?
Your camera is on and you want to close that?
My camera is on?
Yeah.
Okay, sorry.
Right. So that is what I mean by consistency, right? Be consistent in your approach. Then discipline. Do not average when the price is moving against you. You'll always get an opportunity at a lower level to re-enter, right? And as sir is saying, that the other thing is, if you have more lots, if the price is moving in your direction, start taking profit at regular intervals. So these are the discipline that you can bring into your picture. We all know about it. It's just that we need to practice it, right? Theoretically, we all know. Everybody talks about it, right? Not the confidence. Now, the confidence is a very important. Same book, Trading in the Zone. It talks about 3 things: discipline, focus, and be confident. Now, we all know KFC, right? So I generally keep this in front of my system. It says DFC: discipline, be focused, be confident. Confident doesn't mean that you become reckless. Sometimes we become so overconfident that we start, even the market is going against us, we keep on buying or we can keep on averaging. So those are the things. Be confident, but not reckless, right? Be confident about your skills, the tools that you're using, the setup you're using. If you have taken a setup, give the setup some time. Don't change the setup if 1 or 2 days goes wrong. Keep it for some time and challenge the setup. The only thing you will understand is today is the day whether this setup will work or not. Tomorrow is a different day, whether this setup is working or not. Wednesday is a volatile, whether this setup will work or not. Friday is a range bound, whether the setup will work or not. So unless you find a reason not to be confident about the setup, keep using that. You'll gain confidence automatically. And the moment you gain confidence on a setup, all your psychology thing will also start falling into the place. Everything will start falling into place. You start thinking right. How many times you have seen that the first trade goes wrong in a day? The entire day, you keep on taking some wrong decisions. That's the impact of the first step. That's why, I was doing that. That's why in one of the message, I also said that I've stopped taking morning trade. That was the reason, because morning trade, I was not confident. I was only going by some information. I did not have all the complete information. And when first trade of the day goes wrong, entire day, you are in that mindset and you will make mistakes. Fourth thing is patience. Patience is virtue in trading. Wait for your setup till it gives you signal before initiating or exiting the trade. So we have signals for both entry and exit, right? So wait for that. Yeah, we can hurry up. We can, exit in 20 points and 30 points, but that will not give you the satisfaction, right? I'll rather, take a small lot size and wait for a longer duration than taking a big lot size and exiting in 10 points and 20 points. Because the moment you exit in 10 and 20 points, your monkey mind will come into picture. Okay, can I enter again? Can I enter again? And suddenly the market price will, reverse. And whatever gain you have made in by 20 points, that one drop will take away everything. So that's the patience part that we need to do. And the last and the most important, be passionate about what you're doing. Intraday trading is not for you. Don't do it. If you think that you have the, everything that is required to be passionate about it, then there are other ways of making money. There's no hard and fast rule that intraday is the only way you can make money. People make money through swing trading. Sometimes people, do weekly trading. Sometimes they do monthly. Sometimes they investment and other things. So there are other ways of making money. But unless you're passionate about intraday trading, scalping, don't do that. And you're the best person to decide about that. No one else can tell you. Right? So these are the main characteristics that, if we start, inculcating in ourselves, will become better trader. I'll not say successful today, but at least will become a better trader. Right. So moving on to the next one. Yeah, some of the things, why patient traders are rich. Because if you look into it, they patiently wait for their signal. They only take, they make more profit and their losses are small. So they can, overall, if you look into it, they'll make more money. Whereas the impatient traders, they will enter, exit, and at the end, they'll get frustrated and they give up on trading. Patience, what is patience? Patience is for high probability trade. Patience is when there is a setup, then only you enter. If there is no setup, sit idle. As you know, in one of the things that Jagan sir shared, it says that 80% of the time we have to wait. Only 10% of the time or 20% of the time is when we trade. We are in trade, right? So that's the patience of waiting. And as a human, it is very difficult because our mind is a monkey mind. It keeps on, wandering here and there. Every candle we think that we need to jump in, we need to exit, we need to enter, those things. So that is the internal thing that we need to develop, right? I don't think even I'm there, but at least, we are trying that way. Staying in good trade to make good profit. That is also patience, right? Sometimes we enter and suddenly we exit. As Nilesh was saying that rank delta, we need to look into every aspect and then decide. If there are 3 sales signal in super trend, if one becomes buy, then we need to know that this is the time to exit, right? If it is not buy, then stay in that trade. That's how it is, right? Then what are the important aspects of the trading, right? First is take responsibility. Be accountable for everything that is happening. No one else is responsible for it. It is we are responsible. And second thing is be fully committed. If you're not committed, don't do that. There are other things to do because your time, effort, dedication is the most important thing that you can give in this to gain the knowledge, to gain the experience, to learn from it, right? Learning never stops in this industry. Any industry, learning never stops. But here, every day is a different day. You might have seen all the charts. You can see that there is a correlation between every Tuesday. But even within that, you'll find there are different times that things will happen. So learning is never stopped here, right? You learn every day about that, right? Become profitable by having a proper risk and reward ratio. And this chart clearly below, it says that, if you stay long, if your win rate is 20% and your risk reward is only 1-to-1, you end up in loss. But same thing, if your win rate is 20% and your risk reward is 1:1:5, then you'll be in profit. Same thing, if your win rate is 60%, you'll be profitable every time. Whether it's 1:1 risk reward or 1:5 risk reward. In between that, you'll break even and other things. Now, concluding this, why the best traders are best traders is because they stay in the flow, because they don't try to get in anything from the market. The first thing they think about is, I'm not taking anything from the market. They simply make themselves available. So be available for taking the right opportunity, be in the right trade. So that's make yourself available so that you take advantage of whatever the market is offering you at that now moment. So now moment is a very important concept, right? You have to be at that present moment. There is no past, there is no future. When you're looking into the chart, that is the now moment that we all need to think about. If you're not, you anyway cannot do it. People can talk about 100 things.
But he quickly realized tag isn't cheap, and then he discovered this book.
Hello?
He realized if he got a
Okay, right. So far, so good. Now I'll move on to the last part of it, which is what are some of the good practices that we all can think about. And it is not a complete list. It is purely based on the information that I had and what Jagan sir shared. Then we prepared this one. So if anything is missing, you can let me know. So what are the good practices, right? One sec. Are you able to see my screen?
Yes.
Okay. So for an intraday trading perspective, even it is applicable for any type of trading. I have just kept it from a intraday perspective. The first and the fundamental thing, don't take it personally, right? When you go to office, when you go to any job that you do, you don't take it personally. That's a job you need to do, right? smart money and market is not there to take all your money out or to destroy you, right? It is there. They are doing their job. We have to do our job. There's no personal rivalry, no, between us. It is everybody is perceiving market in a certain way and they're handling it in that way. If you do that, it prevents you from being objective, right? That is what the impact it will create, right? That is why that's the first thing I generally think, that sometimes we become so personal that we think that, okay, we know more than what market is doing. That's a fighting with ourselves, our mind. We should stop doing it. Only understand what is happening in the market, and the only way we can look into it by chart. Indicator, oscillator, these are all supporting it, but ultimately the chart body that tells you what is happening, right? So we need to focus on that one. Master the risk management, the next one. It is the lowest hanging fruit of trading, because this is something purely mathematical. There is no emotion involved, nothing, just a mathematics. I have to put stop loss here. I have to do this risk management. You can easily implement it. Sometimes it will be right, sometimes it will be wrong, but at least you'll get into that discipline. That discipline is very, very important. Now, between successful and unsuccessful trading experience, not trading, experience, risk management is the most important thing that we need to think about. A sound risk management gives you a steady increase in your profit. It may not give you a big profit, but at least it will give you a steady increase in your profit. Whereas if you are doing a poor risk management, it can wipe out your capital in a very short period of time, right? At the same time, risk management doesn't say that, don't take risk, right? You still take risk. You can take small losses, but you learn a lot from those small losses. Those small losses are, I'll say, it's like a teacher for you in the market. If you analyze your losses, you learn a lot from that. You don't have to ask anybody to explain that. Your losses will tell you what mistakes you're doing, right? Do not set a target for each day. I keep hearing that everybody, talking about that, I'll set a target of 5,000, 10,000 per day, right? I think let's not set any target, because if you set a target, you put yourself in a pressure situation, right? Think from a long-term perspective, because one day you might lose, but overall, if you're making money in over a period of 1 month, 3 months, 12 months, you will get to that stage where you'll consistently start making money, right? Trading success is an accumulation of many successful managed, both winning trades and losing trades. This is very important, right? Your success is accumulation of both your winning and losing trades. I have seen multiple channels where people keep posting their winning trades, but they don't post their losing trades. So that clearly indicates it's not consistent, right? So if you want to become consistent, we need to be consistent overall, right? Sum of winning and losing trade should be consistent, right? Accept responsibility for your decision. No matter what happens, if your mindset or your biases has resulted in something, accept that. You can work on that. Unless you accept it, you cannot work on it, right? It will change your trading mindset, your trading decision, and you need to figure out what needs to be done differently. Based on that only, you'll start, improving on that aspect of it. Dealing with losses. This is one of the difficult things in a trader's life, right? We need to develop psychology and discipline for that also, right? It is not important, how do you react to a big loss is more important than the loss itself. Sometimes our first trade goes wrong, we become, we get into revenge trading, which is a very, very big, wrong thing to do, I'll say, because we are not in a right mental frame, right? And then we start, reacting to the loss that we have incurred. So that's why it is not the loss that is so big. It is the way we react to those losses is very, very, important. We need to analyze that. We need to look into that. Successful traders, they treat loss as an opportunity to learn, and they improve on their trading, right? That is what is important from their perspective. They learn from it and they, manage.
Mandeep, I have to interfere. You have
Sure.
exactly 10 minutes more.
Yeah, I think I'm almost
One,
there.
second, some of these topics on trading psychology, you have dealt with. Third, there is a request for you to increase the volume again. Okay. Yeah.
Okay.
So we will not have any
is it better?
questions. Maybe the questions we can be written later, or we can deal it in the next sessions.
Yeah, that's fine. Is it better now? The volume?
Yes, yes, it is far better.
Okay. Now the last part of the dealing with losses is never let a bad day cost you more than what you make on a winning day. Suppose you're making average on an average 10,000 a day. Never let your loss go beyond that. The moment it touches that, wait for the right opportunity or don't do that if your mental setup is not correct that day. Like Friday, I was in a different mental setup, so I didn't trade a whole day. I knew that there were big opportunities coming in. I was watching it on my mobile, but I didn't take any trade because I know I'm not in a mental frame. I'm in hospital. How can I do all those things? So I didn't do that. So literally Friday I didn't trade. Right. So that is also controlling your emotional thing on that aspect also. Never let your loss be more than what your average win is on average day, right? Know your stop loss level. This is very, very important, right? Before you get into a trade, you should know where is your stop loss. You don't have to put it in the system, but at least on the chart, make sure that you have drawn a line that this is where I'll exit, no matter what. It may give you, 20-point loss. It may give you 50-point loss on an absolute option term perspective, but at least have that. You know your risk before you enter the trade. You know how much money you're going to lose, and that is, if you're ready to accept, don't think about it. Think like that. It is already gone. Now, if you gain out of it, that's the profit you have. But that is what we need to do. Think about, right? Stop loss is an insurance policy. We all have insurance policy in our life, right? Life insurance policy we have, right? Why do we take that? We take with the hope that we don't have to use it, because when we have to use it, there's something bad has happened, right? But at the same time, it is good protection for us if we need it. So that is what stop loss is all about. Stop loss is an insurance policy. Look at it that way, right? It helps you to protect from your bad days, but at the same time, you don't want to use it. We all hate when it starts getting close to stop loss level, right? So that is the thing that it talks about. Never widen your stop loss. If the market is moving in opposite direction, do not move your stop loss. Stay where you are. You might exit there. Market might reverse after going down. Re-enter at the lower level when all the signals, everything is again become conducive. But the moment market goes down closer to stop loss, don't change the stop loss. That is what, because we keep averaging and we lose more. There's always another trade opportunity around the corner, right? Because it might go down and reverse from there. You can take a trade at that time, right? Okay, next is start with the lower, positions. Don't, straight away start with the big positions. Small position, or suppose if you're in a losing state, like
sorry to interfere. I don't want to extend it more than.
This is the last slide, sir.
No, but still, what I suggest is this. I know it's a lot, right? Can you go over it in 3 minutes? Anyway, the slides are going to be there, and people can read about it. So let's finish in the next 3 to 5 minutes, please.
I think we'll be done, right? Next is important, revenge trading. Do not do revenge trading, because in revenge trading, whether you recover your loss or you don't recover your loss, it's ultimately a lose-lose situation. Why? Even you lose the revenge trade, you anyway increase your loss. And if you, if you make a profit out of it, though you have recovered your loss, but your emotion will work on that. And next time you again make the same thing, it might go wrong. So that's why it is a lose-lose situation for you. Primary fears of a trader is we need to avoid that. What are those major fears? Fear of being wrong. That's the first thing that, we always think, okay, I'm right. But we have a fear of being wrong. Then fear of missing out, fear of losing money, and sometimes fear of leaving money on the table. Market is moving up, we exit early, right? Let go of the outcomes and embrace the process. Process is very important. Keep following your setup, be confident about it, and follow, it. What are the real failures of intraday? Intraday real failures are not trading with a strategy that has an edge. If you have a strategy which has an edge, keep following that, keep trading with that. Not mastering your emotion is another, failure. Third is not having a sense of risk management. Risk management is very, very, important. Without that, it is very difficult. Not accepting the loss. The loss has happened. You cannot do anything, right? And the last part, there are 4 outcomes of intraday trading. You can be either in big profit, small loss, or big loss. We do not have any control on first 3. The only thing we can control from our perspective is the big loss. So focus on that one and control the last one, right? And at the end, I want to conclude it with this, that intraday trading is a game of strategy, trading psychology, and risk management. We need to acknowledge, we need to embrace, and we need to manage each of those things, right? So that's what, from a good practice perspective. I think I covered it within 3 minutes, sir.
Oh, thank you very much. Sorry. Thank you very much, Sandeep. Excellent presentation. Very useful presentation. This was due. Actually, we should have had this before we started even the course. Thank you very much. I know under which difficult circumstances you prepared this. Getting up morning at 4 o'clock and all that, plus your family situation. So, nevertheless, it shows your commitment, and that shows in your trading performance as well. Now, this is just, it will be foolish to think that we can talk about all these things in half an hour or 45 minutes or 1 hour. That attempt is not being made. We are not only here, in every strategy, we are giving only the introduction or exposure for you that this thing is there. Go and have a look. We are like a signal post. We say, if you take this road, you will reach the destination, right? So please treat it that way. Do not expect that this is run by a free program, training program. It is run by the support of the volunteers. There are many volunteers who I know how much the percentage are spent, redoing this presentation, tweaking it again. I think 4 or 5 drafts of each presentation has been prepared. So that's right, so that to present a good product to you. So having said that, so please, there is the YouTube channel. Please, there are a lot of new, whichever I find it interesting or something supplements, I post in the channel, which is growing, the membership growing, the views are also growing. But if you do not make use of the sources available, you are only the loser. Money is hard-earned money, please remember. And another final thing, there's no need to go through all the channels, as he said, all the data, irrelevant data, unnecessary data, unnecessary channels, videos. Be focused. We are trying to give you the maximum. Be interactive. Post your trades. If you don't post your trades, we cannot give you comments. If you keep everything to yourself, nobody can help you. So that's my only, I don't want to be looking advice mode. So handing over to Aman Bindra. Thank you very much.
Hey, thanks, Sandeep. I think you've given a good food for thought for everybody for this weekend now. I mean, like half a day left for the weekend though. And thanks everybody. Thanks participants for being there and hearing people out. And I hope it helps everybody. Have a great Sunday. Thanks a ton, everybody.
Yeah.
Bye. Bye.
Thanks, everyone.